putting on his tennis shoes. Where are you going? And he says, bear's coming. He says, you can't outrun a bear. He says, yeah, but I can outrun you. Right. See, that was his view of my way of deciding cases. And of course, I never, and I still, 28 years now, I've never heard a voice raised in anger in that conference room. I've never heard one justice say anything mean or even snide
at the table or anything like that.
What good would that do? I try to explain that to the students. You know, you get all excited, and all that happens is people disagree with you, think, well, you know, he's all excited, he must be wrong. And that's so true. So we get on well personally, and we're friends personally, and we disagree on some things. Not as many as you think, but some.
It's not always been the case. There was a Supreme Court justice who refused to talk to or be in the presence of Justice Brandeis because he was Jewish.
Reynolds.
Right. So it hasn't always been that friendly. No. But you're saying right now, since you've been on the court 28 years, people don't yell and scream at each other.
And they don't insult each other, and they're not rude to each other, and it's a professional job, and you go in and do your best professionally. And if you want people to listen to you, the best you can do is to think through this problem. Listen to where the other person is coming from, and see what you can contribute to that thought.
But sometimes the dissents are a little bit tough on the person who wrote the majority opinion. Nobody takes that personally?
I get that question a lot, and I used to get it more when Nino Scalia was on the court. And the two of us would be there, and somebody would ask that question, and I'd try to answer it because I didn't want him to. And I'd say, look, I know you're not aiming that question at me. You're aiming it at Nino. Okay, I get it. But what you don't understand is that some people suffer from a disease. It's called good writer's disease. Okay. And if a good writer finds a felicitous phrase, he won't give it up. Let him destroy himself, let the world come to an end. It's like a good comedian. You can't give up that joke. Now, that's Nino. He is a very good writer. He has a felicitous phrase, and we all know that, and we don't take it personally.
Do you have a lot of unanimous decisions these days, or they don't get that much attention? And do you really have a lot of 5-4 decisions, and they get all the attention, it seems? But is that where the court really has its arguments with each other, the 5-4 decisions? And
no, not necessarily. What you read about are the ones that the press thinks the public will be interested in, which usually has a political or a social content. And they'll say, that's the most important. I don't know. One of the most important decisions I wrote this last year was called Google versus Oracle. Right. And it took a year for me to write that. It was about copyright and something called programs, interface programs. And I was told that was very, very important. Well, for me, it was like learning Latvian.
An extra $1 trillion in spending not increase inflation?
By increasing the productive capacity of this country. And that's a very important thing that we, frankly, have not successfully done across most of my lifetime. You know, I've been waiting for this legislation for months since I became Transportation Secretary, but various presidents have been hoping to reach this day for decades, and it hasn't happened for all kinds of reasons. The American public has been rightly impatient. Now we're getting it done, both making up for lost time and laying a better foundation for the future. Let me also point out to the fact that Part 2 of the President's agenda, what I like to call the big deal. But part two of that, the Build Back Better Act, has even more that will help beat back inflation by lowering some of the costs that Americans feel most acutely, the cost of childcare, the cost of healthcare, the cost of housing, the cost of prescription drugs, bringing those down while also making sure that we ease some of those labor market issues we have by making it easier for working parents to afford to go back to work.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
All right, welcome back to Bloomberg Markets, an extended version of Bloomberg Markets today, the last trading day of the year. We are simulcasting Bloomberg Radio and Television. Looking at the markets here, Matt, is, I guess, what you would expect on the last day of trading on New Year's Eve. Why we're even working on New Year's Eve, I don't know, but it's kind of mixed out there. Not a lot of direction. That's okay.
I can tell you.
Go for it.
I can tell you, well, first of all, on two different levels, I can tell you why we're working. First of all, because the boss wants us to.
Good point. He's here.
This is our job, you know? I mean, also, there are people, I've got viewers writing in, I have listeners writing in. There are a surprisingly large amount of people watching, and we're here to give them the information that they need. On another level, I can tell you the reason, technically, why we're trading today, because Pharaoh looked it up yesterday in the New York Stock Exchange rulebook.
Really?
Normally, if a holiday falls on a Saturday or a Sunday, a holiday that you deserve as an American, you get that on either the preceding Friday or the following Monday. However, according to the New York Stock Exchange rulebook, that is not allowed if the Friday or the Monday, which is unlikely, is the last day of the quarter or the year. I guess that could be a Monday too. So in that case, this is why we're trading today.
There's a rule book. I didn't know there was a rule book, but I guess we will follow the rules, and here we are today following the rules. All right, Matt, yesterday the Kremlin says that Russian President Vladimir Putin is satisfied with the outcome of talks with Joe Biden. The phone conversation sets the stage for 3 sets of negotiations on European security next month. Here with more details on that conversation is Marty Schenker, Bloomberg News Chief Content Officer. Marty, what do we know about what these two presidents spoke about yesterday?
Well, I wish I could give you more details, but I don't think we have any. The Kremlin basically cast this as a very positive call. They were satisfied with it. On the American side, they were very clear that Joe Biden told Putin under no uncertain terms that if he engages in any aggression in Ukraine, he'll pay consequences for it. But there's no indication whether Joe Biden was satisfied with the call. So you basically have to make up your own mind what you think happened.
How difficult is this going to be for President Biden, Marty? On the one hand, we clearly want to avoid that Putin marches into Ukraine and annexes a sovereign country. On the other hand, we really want to avoid, as human people, military conflict, right? So is that going to be possible?
I think it is going to be possible. I think what people are not paying enough attention to is the domestic issues that Vladimir Putin is facing. Yesterday morning, we published a story about how COVID deaths in Russia exceeded 85,000 in the month of November, their worst month since the pandemic began. So he has to worry about his domestic issues. And I think an armed conflict, miles away from his home country is not something he would probably want to get involved in.
Marty, the negotiations that are set for next month regarding European security, is this all about Ukraine, or are these broader discussions about NATO, about Russia? Frame out what might be on the agenda.
Well, I think it's clear, Vladimir Putin keeps talking about security guarantees. I don't think you can get any guarantee out of the West. You probably can get some understanding. What the Russians want to make sure is that there's no expansion of NATO, which they consider an existential threat with troops right on their border in places like Poland. So I do think it's going to be more about making sure they understand each other's positions. And then, of course, there's the whole issue of European energy, which Russia is central to.
Yeah, and we are sitting here in Berlin, very sensitive to that. It doesn't seem like Nord Stream 2 is really reversible, is it? I mean, they've finished building it. I know they have to certify it, but isn't this going to happen?
It certainly, all signs point to it happening, and certainly Vladimir Putin wants it to happen, and the Germans want it to happen. When you look at record natural gas prices in Germany and throughout Europe, they need that gas, and the Russians need the revenue from that gas. So I think all things point to it happening. But I do think Putin's behavior is going to determine a lot on whether it gets turned on this summer.
Marty, just about 13 and a half hours to go until another election year. At home, what does the Biden administration, what do the Democrats need to do in order to keep the paper-thin advantage that they have in Congress?
Well, they need to change the narrative. They need to basically connect the good things that are happening in the economy to Joe Biden. Right now, he's getting zero credit for record stock prices, for unemployment at record lows, and he's getting all the blame for inflation. And the Republicans are making sure of that. So they need to turn around that narrative, and so far they haven't been able to do it.
All right, Marty, great talking to you. Thanks so much for joining us. I hope you have a fantastic New Year's Eve, even amidst this pandemic, and we wish you the best as well as your family. Marty Shanker there, serving us well, not just in 2021, but for many, many
You get that. He has that home little studio going there.
My whole career. Yeah, he does. You know, I actually have a studio set up at home, but I've never used it.
Yeah, Marty said this was the first time he used his, so he's usually in here manning his desk.
Yeah, he is a very dedicated Bloomberg employee. We are looking at a market right now that, as we've been telling you, is very light. Right now, the S&P 500 is almost unchanged at 47.75. Dr. James Crow, next, Vanderbilt Vaccine Center Director. This is...
We can come together to help less developed, fragile, vulnerable countries with adaptation and resilience, and we can do what we developed world need to do to reduce the damage being done by our practices of the way we produce energy.
But how likely is it that we keep that 1.5 degrees within reach?
Well, look, the Paris Agreement said well below 2 degrees. That's what everybody signed on to. What is well below? It's certainly not 1.9 or 1.8. It's somewhere close to the 1.5 degrees. And so I think it's very important to do it because every decimal point of rise in temperature, it is remarkably compounded in the damage that it does. We're at 1.2 degrees today, and you see what's happening. Imagine what happens when you're at 3 degrees or so, which is the track that we are currently on.
all that chocolate makes it to the supermarkets in time for Christmas. I'm James Walcock, and I got really curious how chocolate makes its way to the supermarkets every Christmas. So I came here to Nestle's distribution centre to find out how it works. Almost 120 lorries come here every day, and they drop off coffee, chocolate, Kit Kats, Toffee Crisp, you name it. If it's made by Nestle, it will come through here, and then it will get sorted by machines who will then load it onto a monorail that runs right up and down the facility. Automated cranes, like this one coming in behind me now, then load all of the chocolate, storage, all of Nestle's goods into this big warehouse. It can hold up to 100,000 crates. And then after it's been sorted and stored, sometimes for months, it will then end up over here, where then lorries will then take it out to supermarkets up and down the country. You can see the entire process is done without people. Goods can come and leave, sometimes without ever touching human hands. It's one of the largest automated centres in the UK, and it opened during COVID. And this Xmas is its first big test, and so far, it looks like things are going well.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
If you've ever smashed the screen of your iPhone, you'll know that getting it repaired is not only a colossal pain in the neck, it can be massively expensive. That may all be about to change. Apple is introducing a program it's calling self-service repair. That will let you repair your device at home with parts bought from Apple and a manual provided by Apple. It's a response in many ways to the right to repair movement, which has gained pace in recent years. Whereas it used to be quite straightforward to repair electronic devices, perhaps 25 or 30 years ago, as they've grown more complex and proprietary, it's got harder and harder. Now we're seeing a wave of legislation in the works. In the European Union, towards the end of next year, there's likely to be legislative proposals that not only standardize the spare parts for each device, but also ensure that their pricing is reasonable. That's where Apple comes in. They seem to be getting ahead of some of this legislation with their own proposals. But the devil will, of course, be in the detail of what Apple's solution looks like. How expensive are the parts going to be? Could you count them as reasonable? And also, how easy would it actually be to do this yourself?
There are plenty of videos online to explain how it's done, but most customers, we estimate only 5% of customers in the market will actually repair their own device, whereas 95% will go to a professional. If you're going to get it wrong, it's quite costly. And whilst in many ways devices have become easier to repair and more intuitive, I would say, there is also many risks involved in terms of, one little bit of damage to the logic board or one tear of a flex cable could render a significant part of the device damaged entirely.
Right now, to get an iPhone screen fixed by Apple, it'll cost you in the region of $280. For a battery to be replaced, it'll cost you about $70 if you do it with Apple itself. The difference in price to do it at home will be a really important data point, and that's where the detail lies. For the longest time, Apple said that it opposed repairs being done by people that weren't licensed or just users doing it at home. It said that it was dangerous, that it risked creating fires if you open the back of your smartphone. This is therefore a huge handbrake turn, but does quite a lot to burnish Apple's green credentials.
Welcome back to Bloomberg Markets. This is special coverage. We've been doing it all week. We've been loving it. You've been loving it. It is a simulcast on both Bloomberg Radio and on Bloomberg Television. It's been a lot of fun. And I have to say, even though, Paul, it's been fairly light trading between Christmas and New Year's, obviously there are a lot of people taking off. not as many people in the markets as there normally are. It still has been over 50%, so it's still more than half of the volume you see during any other day. And but today feels even lighter than ever.
Yeah, the train coming in today, I was the only one in my car on the train. So that gives you a little sense of what's going on. But tomorrow,
I'm literally
this
the only person.
I'm sure this afternoon the trains will be packed, people coming in for New Year's Eve.
Well, then I don't want to be on one of those trains.
I'll be heading right out. Reverse commute.
Going the other way, a little bit of a reverse commute. Well, we're looking at markets that are not doing a heck of a lot, except for the commodities. I have noticed a lot of commodity movement today. By the way, I do this because my screen is kind of under here a little bit, and my keyboard and my tea mug get in the way, so I have to. I'm backing up and looking under, and I'm a little bit too tall for this desk, so I have to kind of stoop to see what's going on. It doesn't matter if you're looking at any markets except for commodities. If you do look at commodities, right now we're looking at NYMEX crude down 1 1/3%. That's not the worst it's been, not the weakest. It's been off down to closer to 75 even. Right now, 75.98. Brent crude down 1% as well at 78.67. We have seen movement going the other direction too. Nat gas in the U.S. on the rise. Iron ore overnight in Asia on the rise. So that's the place where there's been so much activity today. Not so much FX, not so much in rates, and really not so much in stocks.
Yeah, right now it's a little bit quiet out there, but let's get a little bit smarter, Matt, on this pandemic. Again, let's bring in Dr. James Crow. He's a director of the Vanderbilt Vaccine Center and chief scientist of AHEAD 100. Unfortunately, Matt, he has got his MD degree from the University of North Carolina at Chapel Hill, so I'm just going to have to deal with that. But we appreciate Dr. Crow joining us. Dr. Crow, let's start off by just a little bit of a definition here. What are monoclonal antibodies, and how do they help with this pandemic?
Right, that's a great question. The antibodies are the body's natural defense molecules. After you've been vaccinated or infected, your body spreads lots of antibodies all over the body to protect yourself against getting reinfected. So with modern technologies, we can go in and sample the blood and pull out infection-fighting cells, white blood cells, and we can make a single antibody that can do the job for a particular virus. So that single antibody is called a monoclonal antibody. They've been used in cancer and autoimmunity. There's over 100 of these that are licensed for use in humans, but they haven't been used for infectious disease very much, and COVID is the first time where we see them really being deployed as an important tool for medical use.
What a world we live in. Antibodies can be licensed. I love that. That's crazy. Let's talk about what the possibilities are, Dr. Crow, in terms of helping humanity even beyond this pandemic. What else can we do with this kind of technology?
Well, one of the most exciting things that's going on right now is that a new use of antibodies, a new technology has been rolled out. So there are now what are called long-acting antibodies. Typically antibodies, after we give them, they have a half-life of only about 3 weeks. So they keep decreasing very rapidly and cleared from your body. But now there are engineered antibodies that will last for a very long time. They're called long-acting antibodies. And one of these has now been approved under EUA by the FDA for use in preventing COVID in high-risk individuals like immunocompromised people who can't be vaccinated. And so this technology is not only good for preventing COVID now, but now we know it's safe and it works. We can use it for other diseases. So we have launched a new initiative called AHEAD 100 to prepare and stockpile this type of technology for the 100 most likely causes of future epidemics. You know, the technology is here now, we just need to deploy it.
So, Doctor, how are we, if at all, employing it for this coronavirus, this pandemic? What are the applications?
Well, most of the antibodies that have been approved under EUA by the FDA so far have been for treatment or protecting someone after exposure. But there's a new one out now that was developed with my university, Vanderbilt University, in cooperation with AstraZeneca. It's called Evusheld, and this is a prevention antibody. So we give it by just a shot. It's not an infusion, a shot that prevents COVID. And there are about 5 million people who have risk factors or immunocompromised who cannot be vaccinated properly right now. So this drug is now available under EUA all over the United States for patients at risk. So we're using it for COVID, but at the same time, we're seeing that the technology is now available for other infectious diseases, and that's what our AHEAD 100 program is all about.
Yeah, tell us what you're doing with that initiative, because you're not just the director of the Vanderbilt Vaccine Center, you're also the chief scientist for AHEAD 100. What's that initiative doing?
Well, this is a nonprofit entity. It's a private-public consortium of companies, state, local, even federal government. The Bill and Melinda Gates Foundation has supported us, the Coalition for Epidemic Preparedness. So it's a lot of people who are thought leaders and technical leaders in the field have come together in this nonprofit. And the idea is to make monoclonal antibodies, not just for COVID, but for other diseases that might cause pandemics, like all the things you hear about occasionally causing threats, dengue virus, chikungunya virus, all these types of viruses that are out in nature that have the potential to cross over. We want to be ready ahead of time, not be reactive, but have this stuff stockpiled. And this nonprofit consortium is putting together the discovery, the manufacturing, and stockpiling, so we'll be ready.
All right, Dr. James Crow, thank you so much for joining us. Really appreciate your time, Dr. James Crow, Director of Vanderbilt Vaccine Center and Chief Scientist of AHEAD 100. This is Bloomberg. Good morning.
What do we know and what don't we know? Because there's a lot of speculation, a lot of anecdotes circulating right now.
Omicron definitely has the characteristics to create us concern for many reasons. But also we have been preparing for a moment like that for months right now. And I feel comfortable that the playbook will work. So what is the playbook? One, it is to understand more about this virus. The second, of course, will be protect against infections. And the third is to treat. Let's take it one after the other to understand. I think there are a few things that are not very clear yet with Omicron. One, it is the clinical manifestation of this new variant. Is it creating more severe disease or not? Is it transmitted easier or not? Is it going to younger or older people? All of these are things that as we see clinical cases coming out and the numbers are getting bigger, that's something that we will know in a few weeks.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Breach the Capitol.
Container ship blocking the Suez Canal.
Types of crypto coins.
Crackdown on tech in China.
In the billionaire space race.
Delta variant.
Chip shortage.
Rising energy prices.
The Omicron variant has
Protesters breach the Capitol.
Democracy has prevailed.
A flash mob decided to take on the shore.
Giant container ship blocking the Suez Canal.
10,000 new types of crypto coins.
Crackdown on tech in China.
In the billionaire space race.
The Delta variant of the COVID virus.
Evergrande is the most heavily indebted developer.
Of the chip shortage.
Withdrawal of U.S. forces from Afghanistan.
We did not get everybody out.
Songs,
a lot.
Rising energy prices.
In Europe, it's a huge crisis.
The Omicron variant has triggered a global rush.
Most people who have been successful in Hollywood as producers or writers have been white men. Norman Lear, Aaron Spelling are two classic examples. When you came along, you were not a man and you were not white. So was there a lot of discrimination against you that you felt palpably at the time, or was it very subtle?
I just find that to be a difficult question to answer. And I say that because I don't know what it feels like to be a white man. So I don't know how people were treating the white men at the time. I only know how I'd always been treated. And I was, raised very clearly by my parents to be a person who did not look at things as obstacles. I looked at things as hills to climb. And when anybody treated me in a way that was not 100% respectful, I was taught that that was always their problem and that they needed to be put in their place and that I should move forward. And so I'm sure that I experienced a lot of things that were not probably what other people experienced. I just chose not to be defeated by them or even bother. Some of them I probably didn't even bother to notice.
So today, given how prominent you are in the entertainment world, do you feel discrimination at any point now, or you don't feel any discrimination?
No, I mean, there's an insularity that comes with, being in a certain position in Hollywood, but that doesn't change the fact that, if somebody doesn't know who you are, they still see you as, just another person of color, person of color. The racism in this country is the racism in this country, unfortunately.
So the events that led to the murder of George Floyd obviously affected our country dramatically, and certainly the African-American community particularly. How did you respond to that? You're a prominent African-American figure in the country. Did you feel you had some obligation to speak out or do more, or how did it change your life, would you say?
I mean, I think the events, well, I think that the entire George Floyd situation did a couple of things. One, obviously, like anybody else, I felt nothing but rage and frustration. But I also felt real dismay that a lot of people used that event to finally discover that racism existed. That was disturbing to me, that it took something that horrific for people to go like, oh, wait, there's inequality. That was a little upsetting for me. I don't necessarily know that I felt like I had a particular obligation to do anything more than any other person did. A lot of people were marching, a lot of people were protesting. I think the beauty of what happened with George Floyd was how many average citizens stood up and did something. I think that's the power of that moment, and that hopefully will continue to be the power of that moment. But I also feel like whenever I'm asked this question, I never quite know how to walk the line between saying like, well, here's what I did and here's what I think is important. And because I feel like it might let people off the hook a little bit, because it also suggests that racism is the problem of people of color. And really, I feel like I always want to say, well, it's not what I did to work on the George Floyd problem. It's not what I did to work on racism. Racism is a white people's problem, and what are white people doing to solve it? So to me, like, that's the big question.
When your shares are down 20%, it's got to hurt. But talk to us about, well, really what you're seeing. Take us more forward-looking. Are you worried about people exiting pandemic era and going back to the gym, or are we going to work out at home more?
Well, that's actually the advantage that Beachbody has, is we have never been a direct competitor with the gym. In fact, what we rely on is our ability to influence the 150 million people in North America specifically who are overweight or obese and haven't made that choice yet. Our job is to influence them with great content and this combination of what we call the total solution: fitness, nutrition, and community, so that they can tap into this incredibly cost-effective solution that is entertaining and engaging right at home so that they get results. That's our job, is to help the new person engage in healthy lifestyles.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Welcome back to Bloomberg Markets. We are simulcast on Bloomberg Radio and on Bloomberg Television. Matt Miller here in Berlin, Paul Sweeney there in New York. And Paul, we are seeing markets open. They're going to be, the equity markets are going to be open the whole day. The bond market just does a half day today. But the Dow Jones Industrial Averages down 65 points to 36,332. The S&P is giving up some of the Santa Claus gains that we saw surrounding Christmas, off another 6.5 points to 47.72. And then NASDAQ, tech stocks down the most, down about 0.2% at 15,709.
And yet I look at the 10-year, Matt, on my Bloomberg terminal here, 10-year Treasury, 1.5%. It seems like it's been at 1.5%, give or take, forever. I mean, it's just extraordinary. I know we've seen the 2-year yield move up to 72 basis points, up from 20 just several months ago. But boy, the longer end of the curve, pretty darn steady. And the concern is, are we going to see movement in that end of the curve in 2022?
Yeah, it does feel like it's been a long time. I'm just pulling up the chart on my Bloomberg terminal to see how long we've seen it hovering around 1.5. Man, it really has been since September that it's been at that level. I heard someone point out today is kind of the unofficial 2-year anniversary of COVID. Today, 2 years ago, was the first time we learned of the first case out of Wuhan on the internet. And I swear it's been like 15 or 16 years. Doesn't it feel like longer than 2 years?
It absolutely does. And, we keep all, we're like everybody else, we're waiting to get to the other side of this. So hopefully this Omicron variant will burn out quickly and we can move forward as the weather, warms up as we head to the spring. But I'll tell you, retailers, they had a pretty good holiday shopping season, Matt. We heard that number coming out of 8.5% growth in holiday sales. Let's dig under the layers of that with Mary Lou Gardner, associate partner at Infosys Consulting. Mary Lou, the headline number looked really good, 8.5% growth in holiday sales. What did you take away from it?
Well, consumers started shopping early. They were worried about some of the supply chain issues. And so if you saw some of the early sales, they came in much stronger in coming out of October and early November. So that set us up for going into Black Friday, which was actually a little disappointing in total. But I think what happened then coming out of there were some extra promotions that were dropped. Consumers saw that, they felt comfortable finding ways, significant shifts to online and e-commerce, looking for those frictionless experiences where they could, buy online, pick up in store, it gets dropped right in the back of their car. So there were multiple opportunities for people to feel comfortable about shopping, even with the rise of Omicron. So, and I think people were just so fatigued from last year and so disappointed about not being able to travel and be with family that, people found a way to buy the gifts. Yet spending per person is projected to be down with some people really trying to protect their savings at the moment, but overall more people were in stores and shopping online.
Could these numbers have been higher, Mary Lou, had companies been better stocked? I mean, I wanted a Ram TRX and new GMC Yukon and Ford Lightning. None of these things are there. I can't find any of them on dealer lots.
I wanted a pair of socks. You wanted trucks.
We're going to have to wait I'm going to have to wait years on waiting lists to get this stuff. Is that the case for a lot of goods, that if they had had more inventory, they could have sold a lot more?
So the biggest challenge that you're seeing in the automotive industry and several other industries that have been impacted by it, like household appliances, is the computer chips. So anything that needs a computer chip in it right now, that is what's causing the major backlog there. Companies like Target, Walmart, Gap, other retailers were really worried about the supply chain issues, so they've found some other creative ways to get product into store. So it really looks, you have to look at the retail segment and then the players within the retail segment that kind of figured out how to get product to the store. So in some cases, you didn't see the predicted out of stocks. In other cases, you did see, to get the washing machine you want, it could take 3 to 6 months to get the car that you want. And that really came down to the computer chip issue.
Well, this must be why, I'm looking at the data that you've put together. Apparel sales were up, clothing sales, 47%. Jewelry sales were up 32%. Electronic sales rose, but only 16%. And of course, in electronics, you need to get those chips. In a T-shirt or a shawl neck sweater, you don't. Is that why, at least part of the reason we saw clothing and jewelry stores sales do so much better?
Yeah, it's also part of clothing and jewelry are very giftable. And also a lot of people are starting to go back out again, and they've been wearing the same pair of sweatpants and T-shirts around the house for the past year. So they thought maybe they'd even buy themselves something. So clothing was not a surprise because all last year it was all on the athleisure wear. And now that we're looking at, their stores like Macy's actually did quite well this year in the clothing space compared to their results last year. So I think it's a little bit of, giftable items combined with, treating yourself for sure. Electronics, they're always coming off of a bigger base. They sold more electronics last year, particularly around COVID being shut in, and then just the lack of availability in some spaces like phones. They suffered a little bit with the computer chip impact.
So, Mary Lou, what's the outlook for retail sales? There's going to be a lot less stimulus in this economy in 2022. Does that suggest a market slowdown in sales?
So it's definitely a concern, right? So less, discretionary cash available. The other concern really is the, continued inflation. And, some of the sales that you might see here once we really start digging into it were driven by some of the inflation. I mean, if you look at the cost of, just looking at the cost of gas or looking at the cost of groceries and compared to where they were a year ago, that could be driving your sales. So once you strip out that inflationary impact, it'll be kind of interesting to dig under a little bit to get a better understanding. But I think as that continues and there's less money, in the market for people to be spending on discretionary items, it's definitely a concern that there'll be some pullback. The other concern is just the ongoing supply chain issues. The customers, for the most part, what we're hearing is people were able to get what they wanted. It might have taken them a little bit longer, but there weren't as many kind of out-of-stock experiences as people predicted. And, the UPSs of the world were able to really...
none of those Elmo problems. Mary Lou, thanks so much for joining us. Mary Lou Gardner there from Infosys. This is Bloomberg.
SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Markets. I'm Matt Miller in Berlin. Paul Sweeney with me in New York. We are simulcast on both Bloomberg Radio and on Bloomberg Television, and we're thrilled that you joined us. Yeah. It is 11 a.m. in New York. It is midnight in Hong Kong, and they are celebrating, shooting off fireworks. Yeah. And for those of you on television, you can see that on the screen. For those of you who are listening on radio, I will just tell you, it looks pretty cool. Yeah. It looks like a big party, and surely they're very conservative in terms of their lockdowns and in terms of their COVID policy, but it doesn't seem to have affected the brilliance of their fireworks. They're going off all over Hong Kong, and it looks like a fun place to be, at least visually.
It does. It looks great, and against the water of Hong Kong is really cool. Now the question, Matt, is later on this evening in New York, what's going to look like in New York City? I will not be in Times Square. Matt, I know you thought I was going to go there, but I'm going to probably pass on that this year.
I thought you were going to a deli in Hoboken. Didn't you say?
I might be going to a deli in Hoboken tomorrow to get, I think, a roast beef sandwich or something along those lines. Fiore's, yeah, there we go, in Hoboken. Little.
I have to guess that a lot of people have really scaled back New Year's Eve party plans.
Oh, yeah.
Not that they're not doing anything, but I'm going to a small party. Danny Berger told me earlier she's going to a small party, and everyone's doing, what do you call it, lateral flow tests before the party. So we are all testing first to see, the tests aren't 100%, but to see if we maybe have COVID or maybe don't. Those of us who test positive, hopefully will stay home, and those of us who don't will get out there and try some Veuve Clicquot.
Yeah, scale it down a little bit. All right, let's
talk.
Go ahead, Matt.
Well, I wanted to bring in Adam Crisafulli right now, founder and president at Vital Knowledge, to talk to us about.
Hey, before we get to Adam, you want to check in with Abigail? Because I think I want to get a sense of how things went in 2021. We had a heck of a year in these equity markets. Abigail Doolittle joins us, gives us a quick look back. Abigail, what do you have for us?
Well, you know, Paul, it's interesting because you and Matt are talking about scaled back New Year's Eve's plan. That is the case for the markets right now, too. We have very small moves. At this point, declines. The S&P 500 down fractionally. It's going to be interesting to see whether or not it can push higher by the end of the day for a 71st record close, potentially of the day. The NASDAQ also lower, and that has to do with the fact that the bigger laggards on the day are some of those mega cap tech names, such as Facebook, Amazon, and Google. Bonds not doing all that much, but at this point, a little bit of a bid. You have that 10-year yield back below 1.5%, and crude oil breaking a very long winning streak, down more than 1.2%, of course, on the year, up more than 60%, so perhaps some profit taking into the end of the year, or maybe a little bit of concern around Omicron and what does it mean for global growth in 2022.
Well, you know, it's interesting. I thought kind of the opposite. I know it's down today, Abigail, but it's still $76 a barrel for NYMEX, $79 a barrel for the global benchmark Brent crude. That tells you something about global demand. It's not dropping, as we certainly not at the same inverse rate as the rise in Omicron cases, right?
Certainly not, given the fact that right now global cases at 2 million. And to your point, oil does appear poised to keep rising in 2022. That, of course, from my standpoint, is based off of the technicals. It does seem as though oil could continue to go higher. Should that occur, because something that's so interesting about oil being higher this year is the fact that the dollar is also higher, the best year since 2015, up about 7%. You often don't see commodities surge higher. The Bloomberg Commodity Index overall up more than 30% with the dollar. So that speaks to a strong economy and reflation as opposed to inflation. Will that be the case in 2022? We'll have to find out. But lots of interesting takeaways from this very risk-on year right now into the new year of 2022.
Abigail, thank you so much. We really appreciate getting that update on these markets. Abigail Doolittle, markets reporter. Let's bring in Adam Crisafulli, founder, president of Vital Knowledge Media. Adam, as you know, Abigail is just reporting a heck of a year for risk-on assets here, and it begs the question, a lot of investors, as they think about coming back into work on Monday, now what do we do in 2022? How are you thinking about the new year and where the opportunities might be?
So I think perversely, the last 2 years of the pandemic were obviously a very negative period for humanity, but it was a very favorable time for equities and capital markets, asset valuations, largely because you didn't see a sustained decline in earnings in aggregate for the S&P 500. But more importantly, you saw an enormous tidal wave of liquidity, fiscal and monetary, wash over markets that helped drive multiple expansion and helped sustain economic activity. And so I think now that we're kind of looking to the end stages of the pandemic, and I'm very optimistic about the pandemic kind of dwindling over the coming weeks and months, I think a big headwind is going to emerge for markets as that occurs, where you have this stimulus withdrawal process begin to take place. And so you have fiscal cliffs and monetary cliffs throughout 2022. And I think that will create headwinds for equity multiples. And that, to me, is going to be one of the major macro themes for 2022. I think
we've already seen multiples. We've already seen multiples shrink. We've already seen multiples come down over the past year, right? I was looking at S&P multiples graphed on the Bloomberg, and we were up at 31 this time last year. Now we're at 26 and change. How far down do you think they come?
So I think if you look on the forward year earnings, so you're looking at about, it's about 21 to 22 times for the 2022 year-end consensus forecast, which is certainly an elevated multiple. So even if that were to come down a turn, that still would create downside pressure for the S&P. And it's not, there's not a lot of consistency among multiples. So the groups that have the more extended multiples and PE ratios, I think those are going to be more vulnerable. Those are the groups that have seen the most benefit over the last couple of years from what's occurred in multiples. So I think going forward into 2022, again, that's going to be your biggest headwind for U.S. equities, especially where you have some of the highest multiples on the planet in aggregate for our major indices.
All right, Adam, given that backdrop, the headwinds, the fiscal policy, the monetary policy, the stimulus coming out of the marketplace, rates rising, where do I go in the equity markets? What sectors do you think can perform in that type of backdrop?
So I think in the U.S., your traditional cyclical groups should hold up well. Financials, energy, I think pockets of healthcare are appealing as well. Groups that have multiples well below the market, and that should benefit from some of the dynamics that some of the changing dynamics that you'll see in rates. And I think internationally, Chinese equities really set up well right now, given they're coming off of a horrible year of performance. Sentiment is atrocious. And China will be one of the only major economies on the planet that's actually going to be expanding stimulus in 2022. And, there are some possible green shoots on the growth front, as we saw overnight with the PMIs, which came in a little bit better than expectation. So China, to me, I think stands out as one of the more favorable countries, at least for the initial months of 2022.
What's the biggest risk to your outlook, Adam?
I think the biggest risk would be you see a really sharp decline in inflation, which allows the Fed to kind of back off of their policy guidance for 2022. So right now, they've got it for 3 hikes, an end of quantitative easing in March. So clearly, if you were to see a real quick and sudden pullback in inflation, they could easily hike once or twice, in which case you're going to see what we saw for the last couple of years extend further going forward. I think a lot of it's all going to come down to the rate of stimulus withdrawal and then the effect that has on multiples.
Adam, real quick, 30 seconds. Is there a Washington risk out there? We're heading into an election year.
I think for the coming year, not really. I do think that they'll be able to reach some type of a Build Back Better consensus. There are not big differences about money. The big differences are more on policy. Usually you see legislation get killed because of monetary differences. Manchin seems amenable to something about $1.5 trillion. So I think that there won't be major disruptions in Washington. 2023, though, will be a different story. I think you're going to see Republicans take at least the House or the Senate. And I think 2023, you're going to see some really vicious fiscal battles involving the debt ceiling, involving budgets, possible shutdowns. But I think 2022 should be relatively quiet in Washington as both sides gear up for the midterms.
All right, Adam, thanks so much for joining us. Adam Crisafulli there from Vital Knowledge Media talking to us about his expectations for 2022. We're looking at markets right now, not doing a heck of a lot, but on the downside. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Protesters breached the Capitol.
Container ship blocking the Suez Canal.
Types of crypto coins.
Crackdown on tech in China. In the billionaire space race.
Delta variant.
Chip shortage.
And rising energy
It's a
prices.
huge crisis.
The Omicron variant has
Whether you get your news on TV, on the radio,
on Bloomberg Radio,
on the web,
Australia.
on the Bloomberg Terminal, or the Bloomberg apps,
Bloomberg Green.
the news that affects your business.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
Is our business. Bloomberg TV and radio. The world is listening.
That Latino that wants to do better and does better. And I think that's the driving force behind them. When they come to the States, they come with this idea that they're going to make it, that anything is possible. And I do believe that. Even though I was born and raised in New York, I do believe that. I do believe that, the United States is an amazing place to be in.
According to the New American Economy, immigrants make up 1 in every 5 entrepreneurs in the country.
Out of that, Latinos start 1 in 4 new businesses in the U.S., making them a critical source of new jobs in the economy. Business owner Ona Diaz-Santin of 5 Salon and Spa in New Jersey is one of them.
Our salon is different because we really focus on the people that walk in through our doors. So I've been here 20 years, so for me, this was my home. I'm grateful for you every freaking day. I am American-born, first generation. My mom and my father are both from the Dominican Republic, born and raised there. My mom owned many hair salons in the States when she came to the United States, and I basically grew up in a hair salon that, there was no playground or none of that. It was, my mom had to work. She had to do what she had to do, and she did it. And then I just kind of fell in love with that, and here we are. He has a side part natural, but it's usually worn back. Okay? Thank you.
Ona took out a small business loan to purchase the salon almost 4 years ago. A recent Stanford study found that only 51% of Latino business owners receive funding when they apply from national banks, compared with 77% of white business owners.
You can't help but wonder, are we not good enough? What are these people that are in control of the monies thinking? How can we change the narrative on that? We push harder because it's that much harder for us.
The Stanford study also found that Latino-owned businesses contributed to about $700 billion in sales to the economy annually.
I think that a lot of the immigrants that come to the States have this entrepreneur spirit. When you come here with a hope, a dream of a better life, not only for yourself, but for your children, for your loved ones, your parents, whoever it is that you're taking care of. Going back to March, we were thriving, right? We were thriving, hustle, bustle. Some Thursdays and Fridays, we were seeing over 100 people a day. Then we got the news that, there was going to be a shutdown. Since I was angry, I was nervous, I was scared. Every 5 seconds, it was a different emotion. Then we reopened, and we had to come out strong because the revenue loss, it was about 30% of revenue loss. That's a huge hit. We got the PPP loan, and it wasn't the full amount, but it was very necessary and it was important.
3% of Latino-owned businesses received a partial PPP loan, whereas 7% of their white counterparts got one.
2021, we're here. We're only 7% down. And the way that I project, come holidays and everything, we will be right on track. My advice is, si se puede. If you can do it, find the resources. They're out there. Pick up the phone, call me. I will help you. We should be rooting for each other. If it wasn't, again, for my family, me sitting down and having a heart-to-heart with a bank and my family, like, how am I going to do this? But I want it. There's always a way.
When you talk about the commercial viability, the idea that these companies can actually make money off of this here, does this become, I guess, something that's niche in the sense that you have to pay several $100,000s to do it, or does it come back down to a level where just regular folks like you and me will somehow find a way to be able to take a trip up, and this can be a business model that will be sustained?
I think it's important to note that space tourism is a small segment of the overall global space economy. Space tourism accounts for $1 billion of a global $350 billion global space economy.
What's the rest of it?
$260 billion of that is satellites, manufacturing them, launching them. And these satellites we use in our everyday lives, whether that's to listen to the radio, to watch Bloomberg on our satellite television, or to navigate us to our destination via GPS. And I hope in the near-term future, we will add getting our internet from space.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
All right, we are back. Bloomberg Markets. We are simulcasting Bloomberg Radio, Bloomberg TV, Matt Miller, Berlin, Germany, me, Paul Sweeney, New York City, 731 Lex, Bloomberg HQ. So, Matt, for New Year's Eve in Berlin, do the kids go to Brandenburg Gate and kind of ring in the new year? What's the deal?
Okay, so normally it sounds like an absolute war zone in Berlin. On a typical New Year's Eve, it would already be so loud behind me, you know, it's almost 5:30 p.m. here, that you would be able to hear it for sure on Bloomberg Radio and on Bloomberg Television. However, it must be due to the Omicron outbreak, we haven't heard any fireworks yet. Usually it's an extreme, surprisingly shocking amount of fireworks that, you know, everyday people set off, not a professional fireworks display. This year, we do have some kind of giant concert going on at the Brandenburg Gate. For those of you watching on Bloomberg Television, you can see it behind me. If you're listening on Bloomberg Radio, you probably know that I broadcast from directly in front of the Brandenburg Gate. It's all lit up in blue. The quadriga, which is the four-horse statue on top, is shining in gold, and it looks like they're setting up for some kind of concert. I don't know who it is, if it's like Ariana Grande or Beyonce or who it is. I wouldn't know probably anyway, but it looks like it's going to be a big deal.
All right, good. Well, they're doing something in, you know, Times Square. I'm not sure what, but they're going to try to limit the access, limit the number of people, but they're getting out, so we'll see how that all goes. Let's talk markets for a little bit here. Bring in Vincent Signorella. He's Bloomberg's global macro strategist. And Vincent, thanks so much for joining us here. You know, I'm sure you're going to be with the kids down in Times Square, but before we let you get there, love to get your thoughts on, when you talk to traders, how do they think 2022 is going to shape up?
Well, I mean, by and large, the mood as of your previous guest is optimism, the hope. I mean, I call it more of a hope as opposed to what many are calling or believing is a reality, is that the virus will burn itself out sometime around mid-January, likely after New Year's celebration gatherings, and we get through that couple of week period. And so they by and large are hoping that is the case, and that we don't see a wage price spiral in inflation. And as long as inflation keeps pace with growth, we'll continue to see corporate earnings hold up, and therefore we'll continue to see stock prices go up. I personally think there are so many things that can happen to upset the apple cart. I am not as optimistic as I would say the majority of people are.
So do you expect losses then? I mean, after 3 years of stellar double-digit gains in equities, are we going to see a losing year in 2022?
No, I wouldn't say a losing year necessarily, but I would say better levels to buy. I think there is going to be a bit of a downturn. Besides, you know, take into account all of these, you know, potential super spreader events, and whether or not the variant burns itself out remains to be seen. You know, besides New Year's, you have the Super Bowl, you have the Chinese Olympics, you have Mardi Gras. I mean, there are so many things in the next 2 months where people are going to be getting together in mass. And realistically, everybody's tired of this thing. So guard is dropping, and people are not wearing masks maybe as much as they should be. And there are still a variety of unvaccinated people out there. So I just get the feeling that this is going to go a little bit further into the spring, and that we're going to get some kind of a pullback. and we're going to get opportunities to get involved and buy stocks at better levels. And then going forward, I think we'll see the optimism, I think, in the second half of the year.
I am so...
That people, yeah.
Vincent, I'm so pumped for the Super Bowl and for Super Bowl parties. I'm not sure if you're aware.
You will be in the States now.
I'm moving back.
Yes.
Not just in the States. I'm moving back in 1 week. And Vincent, I'm going to be living in Scarsdale. Probably I could hit your house with a golf ball from my place.
Yeah, absolutely.
So if you have a Super Bowl party...
We're literally in the next town over. So
if you have a Super Bowl party, I'm in. I'm most interested to know what you think about earnings and what you think about multiples, because these are two key factors into what happens in the markets, right? And our last guest sees earnings around 240. I talked to Michael Purvis earlier. He sees earnings at 240 and change. And our last guest also said he thinks forward multiples around 21, 22. How do you see those two important factors?
I think we could see them end up there. And as I said earlier, I don't think we're going to start out that way. We're starting to see the labor force have a leg up, if you will, on corporate America. We're seeing some wage gains that we haven't seen in a long time. We've seen strikes from unions, Caterpillar, Kellogg, for instance, and those unions winning out, if you will, to get better wages. So those wages are going to factor into corporate profits. The key, of course, is whether or not those profits can be passed along, and they'll only be able to be passed along if the rest of the country, if the rest of the workforce manages to get wage gains to go with it. And we're not talking about wage gains that I think are going to, I don't think we're going to see this wage spiral that people talk about. We're nowhere near that. So the Fed isn't going to have to worry about inflation running away necessarily, unless other factors intervene, commodity prices, for instance. But I think in the near term, multiples will suffer and earnings will suffer until the cycle catches up and until people are closer to accepting those higher prices.
All right, Vincent, thank you so much for joining us. Always appreciate getting your thoughts, your perspective. You spend a lot of time on the street. You talk to a lot of traders on the street. You've got your finger on the pulse of that, Vincent Signorella, Bloomberg's macro strategist, giving us his thoughts. A little bit more of a cautious outlook from Vince, and I can understand that given his experience. He's seen the market cycles. There are some headwinds. There are some bricks in that wall of worry, if you will, that market participants and markets in general are going to have to deal with in 2022. We'll have more coming up. This is Bloomberg.
John Paulson made Wall Street's most lucrative trade of all time.
One of our investors called me and he said, John, I just got the monthly results. I think there was a mistake.
It was no mistake. Paulson's bet on the collapse of subprime mortgages in 2007 earned his firm $15 billion, the largest one-year payout in the history of financial markets.
It's kind of like finding a needle in a haystack.
Paulson's 2007 performance rocketed him to the ranks of superstar managers. At its peak, his firm managed $38 billion, making it one of the largest hedge funds in the world.
It opened up a lot of doors and became very interested in terms of the people that I met.
Paulson has yet to repeat the success that made his fortune. Recently, he joined a list of industry legends to quit the hedge fund business, converting his fund into a family office.
Personally, I never really liked the business side of the business. I did like the investing side.
He's also enjoyed giving away his fortune. He pledged $400 million to Harvard University and donated $100 million to the Central Park Conservancy.
I wanted to give back to the institutions generally that were important to me.
that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Cities are coming back to life, offices are reopening, and commuters are looking for quick, eco-friendly ways back to work. One of the options employers are incentivizing, the electric scooter. E-scooters really took off in the summer of 2017, but when the COVID-19 pandemic shut down the US in March 2020, scooter-sharing companies suffered.
When things first started to hit, there was about a 90% decline in ridership across the board.
The few scooters you may have seen on the street were more than likely being used by frontline or essential workers. Spin wants to seize the moment and has a new scooter packed with tech for the post-pandemic world. Most scooter companies buy off-the-shelf scooters and slap their labeling on them, but this scooter is designed and built in-house. We took one for a ride. The S100T has a more powerful 500-watt swappable battery pack for longer range, faster acceleration, and less environmental impact. And it can see the world around it. Ben explains how.
It's basically cameras and sensors on the scooter that goes through an AI algorithm, and it basically says, am I on a sidewalk? Am I on a bike lane? Am I parked correctly? And then it can deduce that in real time and provide audible feedback.
The technology is about enforcing good rider behavior, which Spin hopes will make more cities get on board. The company ran hundreds of tests bashing and smashing the scooter to prove its durability and safety. It's a dynamic industry. The main players globally have raised more than $3.5 billion since 2017, according to Bloomberg NEF. Spin was bought by automaker Ford in 2018, and it's grown to be the 3rd largest scooter sharing company by sales in the US, behind Bird and Lime, according to data tracked by Bloomberg's Second Measure. The company is San Francisco based, but it's launching its new two-wheeler in Sacramento. Its biggest market is Washington, D.C. With more markets up for grabs, will Spin's technology convince hesitant city officials?
A more durable scooter will last longer, you don't need to replace it as much, so naturally it's got better environmental credentials. Are they safe to drive? So a better scooter is obviously going to get you a tick mark in that category.
Spin's also working on a teleoperated scooter built by industry supplier Segway Ninebot. It's a 3-wheeler powered by software from Tortoise that can be moved out of harm's way remotely or to an area where it's more likely to get a customer. Ed Ludlow, Bloomberg News, San Francisco.
Welcome back. This is Bloomberg Markets. I'm Matt Miller in Berlin, Paul Sweeney in New York. We are simulcast on Bloomberg Radio and Bloomberg Television. It is New Year's Eve day, so we wish you all a very happy holiday today. Looking at markets that aren't doing much in terms of the equity indexes, the S&P 500 is fairly unchanged right now at 4776. The Dow Jones Industrial Average is down, but only 37 points to 36,300. and 60. The real action, I think, is in commodities. If you have a Bloomberg terminal in front of you and you type GLCO, you get a great overview of global commodity prices, and you can see that everything in the oil patch is basically down. Nat gas is up in the U.S., although it was down huge here in Europe today. Most of the metals are gaining. We saw iron ore up overnight for a second day in a row in Asia, and we have gains today in copper, gains today in nickel, etc. And the ags seem to be down for the most part. The softs are off. Coffee, Paul, is down right now. And I think that's because it's New Year's Eve. People are bidding up champagne.
Exactly right. And when it comes to commodities, I always turn to Mike McGlone, Bloomberg Intelligence. He tells me what I need to know, and I always ask him, obviously, for the pork belly quote. That is my favorite commodity of all time from Trading Places. All right, let's get a little bit smarter here about this pandemic. And
frozen concentrated orange juice.
Frozen concentrated orange juice, exactly right. Let's get a little bit smarter about this pandemic as we try to do on a daily basis here. Today, Maria Elena Bottazzi, Baylor College of Medicine Associate Dean of the National School of Tropical Medicine and a microbiologist. A lot going on there. Maria Elena, you're joining us from Honduras, much, much warmer, I'm guessing, than Midtown Manhattan. But Maria Elena, thanks so much for taking the time here. I'd love to get your thoughts on kind of how we should be thinking about these vaccines and these boosters going forward. Is this something that Matt's going to have to get jabbed every 6 or 12 months to keep up his antibodies?
Well, thank you, and Happy New Year to everybody. Well, the reality is, if we continue with having so many places and populations not vaccinated, we will continue with this pandemic. And in fact, maybe we'll need to jab ourselves more often. I mean, this is really what we need to do, is getting more people vaccinated and getting more vaccines out there. And indeed, those of us who can get the reinforcements with other vaccines do so, because the Omicron is pretty much swiping out the rest of this year.
One of the big worries is that as privileged countries in the developed world start giving ourselves fourth boosters, there are a lot of poorer countries that haven't even been able to get their 2 initial shots, or maybe even not the first shot. Isn't that a recipe for disaster?
Well, I think we're already seeing it's a recipe for disaster, right? I think we know very well that when you have a lot of populations that under-vaccinated or not vaccinated, these variants arise. So that's why we have some really great news with the fact that, our Texas Children's Center for Vaccine Development, together with Biological E in India, just got authorization of a very conventional way of making vaccines. It's a protein-based vaccines that we think can now be made in large scales and hopefully bring it to those locations where there's a hard time getting vaccines or getting people vaccinated.
Maria Elena, what about the hope that this virus eventually mutates itself into something not nearly as harmful to your health as a human being? I mean, how high is the likelihood of that?
That's a very good question. And of course, we've seen how we do have other coronaviruses that are what we call common cold type of coronaviruses, right? It takes a while. I mean, it's not a given that, this virus from one day to the other is going to become this community type of, not as pathogenic virus. What we still do not know, however, is, again, those long-term eventual consequences of having been infected with all sorts of variants from COVID-19 or the SARS-CoV-2. But if we continue, it may be that indeed it will become established, but at what money, right? I mean, we don't know the impact of morbidity. We do not know the impact of culture and health, and eventually, as you're very interested in what's the economic impact of having all these people sick or all these people pretty much with sequelae from this disease.
So Maria Elena, I guess I'm wondering, as we think about getting vaccines into those difficult to reach places, emerging markets in particular, are we going to get to a point where where you don't have to cold storage these vaccines, that maybe it could be as simple as a pill, and that you can deliver, billions of these pills globally very efficiently? Is that where we're trying to get to?
It's also a very good question. I think all of us in vaccine development have always strived to develop interventions that indeed reduce that burden, right, of the cold chain, the distribution, the accessibility, the quantity, the way that you distribute it. We today do not still have that, but again, using, for example, a conventional platform like protein-based vaccines, we know that at minimum, they already have an ecosystem of how they're being distributed. They use simple refrigeration. As you recall, initially, the RNA vaccines were having a lot of difficulty because of the very strict freezing temperatures that they needed to keep it maintained. I think it's going to get better. They're of course learning more and more how to manage those technologies also. But our aspiration is a couple of fold, right? Our aspiration is, a vaccine that can be made in large quantities to reach everybody with low cost, with high level of safety, of course, and efficacy. But at the same time, that we can maybe even have a universal vaccine eventually for many coronaviruses, so that we don't have to worry about getting vaccinated with many different vaccines or changing the vaccination depending on the strains that arise. So a lot of us are working also not only on the COVID-19 vaccine, on addressing the variants, but also the future coronaviruses. How can we get a universal vaccine?
Maria Elena, great to have some time with you. Thanks so much for joining us. Maria Elena Bottazzi, she designed a vaccine, Corbavax, with Peter Hotez. That's another level of intelligence. This is Bloomberg.
Perspective. A recent headline, you got Kellogg's Cereal Union says the latest agreement that they had was rejected. Deere had to finally make a union contract. How concerned are you about the longshoreman contract and union negotiations right now?
Well, we're some time away from that. The contract expires on the 30th of June next year, and both sides have told me that they'll sit down to the table and begin negotiating in May. These are always important discussions, and usually when the spotlight is on our industry. But there'll be some issues around wages. The industry is making a lot of money. The longshore folks would like to see that. Now, I don't speak for either side, but training and development of the workforce will also be key as robotics and automation are front and center. The workers cannot be left behind.
Yeah, but to that point, do you feel like the balance, though, has shifted? For so long, workers had a lot less negotiating power. Do you feel like the pendulum's shifting?
The International Longshore and Warehouse Union, which does work across 29 West Coast ports, is very strong and a democratic organization.
Protesters breached the Capitol. Democracy has prevailed.
A flash mob decided to take on the shore.
Giant container ship blocking the Suez Canal. 1,000 new types of crypto coins. Crackdown on tech in China. In the billionaire space race.
The Delta variant of the COVID virus.
Evergrande is the most heavily indebted developer.
Of the chip shortage.
Withdrawal of U.S. forces from Afghanistan.
We did not get everybody out.
Songs, you lie.
Rising energy prices.
In Europe, it's a huge crisis.
The Omicron variant has triggered a global rush.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
In crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
During the period of COVID, you added that many jobs. I mean, why was business so good during the COVID period?
You know, it's really interesting when you think about what happened in COVID. Sort of overnight, there was we all moved online, and Accenture since 2013 has been building our capabilities in digital cloud and security. And so, at the time of COVID, right, we became relevant and critical for really all of the world's leading companies. And when you look at this fiscal year, which we just ended, we actually had more clients who had over $100 million in bookings in the first 3 quarters of our fiscal year than all of last year, driven by what we call compressed transformation, the need to digitize all parts of the business.
Now, one of your competitors, and you may not admit you have competitors, but a company called McKinsey, you probably have heard of them, they say, we don't want to be a publicly traded company. We're a partnership. It's easier to do this when you're not a publicly traded company. But you're a publicly traded company with a market cap of over $200 billion. So what do you think about the view that consultants should be privately owned as opposed to publicly traded?
You know, I think it's an interesting question. For us, the markets are an important element of discipline, right? We're giving our results every quarter. And of course, we think it really attracts talent. Our employee value proposition is a really strong one because of our stock, which is a huge part. We have a pay for performance and a culture that's tied to creating value for all our stockholders. And so it's served us well in terms of attracting great talent.
Right, but you're not competing with private equity, I hope. I mean, you're not going to be trying to steal people from private equity to go into consulting, I hope.
No, although private equity seems to be trying to compete with professional services and hiring a few people and acquiring a lot in professional services these days. So.
Well, that business has been a growth business. That's why you see a lot of acquisitions there. Now, you're doing this from Washington, D.C. Washington, D.C. is a great place. It's the capital of our country, but it's not necessarily known as a place you run global businesses from. Why are you headquartered in Washington, D.C.?
We have not had a headquarters really since for 30 years, 3 decades at least. Pre-COVID, we were probably the largest organization running itself remotely. Our leaders are around the world, and so the sort of de facto headquarters has always been wherever the CEO is. So the last CEO was in Paris, it was in Paris. Before that, it was Boston, before that, Dallas. And so DC is a great place to be based. And in fact, this is the first time in 30 years the CEO and the CFO are out of the same office. And so I'm very fortunate to have Casey McClure here with me in DC.
So during the COVID period of time, did you go into the office or you just worked remotely?
I worked remotely. One of the things that we are famous for is being very close to our clients. And so our offices are not the center of our work. And because we have a distributed leadership team, I literally, even pre-COVID, would go to the office and be on, Teams calls. And so during COVID, I wanted to make sure that our people felt comfortable working from home and didn't feel pressure to go into the office. And I think one of the great learnings out of COVID is this idea of omni-connections.
Extra $1 trillion in spending not increase inflation?
by increasing the productive capacity of this country. And that's a very important thing that we, frankly, have not successfully done across most of my lifetime. You know, I've been waiting for this legislation for months since I became Transportation Secretary, but various presidents have been hoping to reach this day for decades, and it hasn't happened for all kinds of reasons. The American public has been rightly impatient. Now we're getting it done, both making up for lost time and laying a better foundation for the future. Let me also point out to the fact that Part 2 of the President's agenda, what I like to call the big deal, but Part 2 of that, the Build Back Better Act, has even more that will help beat back inflation by lowering some of the costs that Americans feel most acutely, the cost of childcare, the cost of healthcare, the cost of housing, the cost of prescription drugs, bringing those down while also making sure that we ease some of those labor market issues we have by making it easier for working parents to afford to go back to work.
Good Friday morning to you. New Year's Eve special Bloomberg Markets edition. Why special? Because we are simulcasting Bloomberg Radio and TV. We've been doing it all week, following up on these markets as we close out 2021 and taking a look to maybe some opportunities in 2022 across all the asset classes. And Matt, just a little bit of a red on the screen here today as we finish up the last day of trading in what has been a very impressive 2021 in terms of equity performance.
Yeah, we're still up 27% year to date. If I had told you, Paul, at the beginning of 2020, we're going to have a global pandemic that is going to strand travelers all around the world, that is going to mess up supply chains to the extent that nothing will normalize for years. Would you have guessed that markets would rally in that time like 50%?
No, I mean, it's just extraordinary how, you know, central banks across the globe flooded the market with liquidity.
And governments.
And fiscal stimulus. And that is what has been propelling this market. And of course, if you take a look at 2022, a lot of that's going to be coming out of the marketplace, and that has raised some concern for some people, and some people saying maybe I need to take a little bit more risk to think about generating some good returns in 2022, and that may even include emerging markets. Luis Lemus, he joins us. He's from Continuous Capital. He's a partner and client portfolio manager. Luis, thanks so much for joining us here. What's your call for emerging markets for next year?
Hey, Paul, thanks for having me, and thanks again, Matt. So 2022 is going to be an interesting year. If you just look at the backdrop of what we've been through over the past 12 months, obviously it becomes a little frustrating at times. But again, our firm is solely focused on fundamentals. We're very bottoms up. We focus on high quality businesses trading at attractive prices that pay some sort of income or dividend distribution. And more importantly, is we want those characteristics to persist. So when we look at the macro point of view, yes, sometimes it looks a bit gloomy, but we have to remember emerging markets, volatility is inherent, right? We have 26 different countries. When you think about last year's best performer, South Korea was #1. It put up almost 40%. Year to date, it's almost down 9%, right? And same goes for China and a few other countries. But when we think about what could unravel, valuations are extremely depressed, not only on an absolute basis, but also relative across various indicators. A quick one is the Shiller price to earnings ratio, which essentially levels the playing field between countries such as the United States and emerging markets because it adjusts for cyclicality and inflation. And right now, the discount is at all-time highs. Now, is that the only thing that will unlock value? We personally don't think so. It's a confluence of events. And I think one component that seems to get overlooked is the portion of narrative economics that we've been seeing over the past 12 months. When, you know, we latch onto a story, be it for good or bad purposes, and then it perpetuates itself. Because if you look at the underlying fundamentals of a lot of these businesses, especially the ones that we invest in, they continue to persist, they continue to beat on earnings and have high quality type earnings. And so it's very, you know, healthy financial statements. So I think as a whole, diversification is key. It's hard to actually tell when that value will begin to unlock, but I think once momentum starts to carry itself and there's relative outperformance, I think it will continue.
What is it that I mean, if I look at my comp screen on the Bloomberg terminal and I put in big developed markets like the S&P versus iShares MSCI Emerging Markets ETF or the MSCI Emerging Markets ETF. Emerging markets did keep up if I look over the last 2 years into December, January, February, March, and then started to underperform. What happened? What changed?
So China was a component of that. And again, China today drives a majority of the returns for the index. When you think about what it is today, it's roughly a third. But if you go back to when the index was created back in 2001, it was less than 5%. I wouldn't call it a rounding error, but it was a lot more minimal. So today, a lot of what drives returns in China will obviously create some skew to the index. That, I think, coupled with a few news sources, I know that there was a lady that just discussed vaccinations. There was a lack of vaccinations across multiple markets, including India. That started to pick up. I'm originally from Mexico. I can tell you that it started to pick up recently, but for a while, it was pretty flatline. But again, removing the noise specifically, looking at the fundamentals, it's a little head scratching sometimes because, again, there's just so much divergence between not only the U.S. and emerging markets, but emerging markets just to broad developed indices across the globe.
So, Luis, when you and your team are looking for opportunities, do you start at the country level? I want to be in Brazil. I don't want to be in China. I want to be in South Korea. Or do you look for individual companies first?
So our philosophy is based on academic research, and we've looked at history, and what's rewarded emerging markets specifically is not taking big specific or sector or country bets. We focus more on the individual company level. So think about it this way. We isolate the risk to the country level. So if China's 33% right now, we'll be plus or minus a few percentage points, but it's more of a function of finding high quality businesses that we can, again, put within that bucket. But for us, it's not a specific view on a country or sector because, again, going back to my first comment, there's just so much inherent volatility year to year. Picking which will be the specific winner out of 26 countries, just based on raw statistics, is very difficult, right? So diversifying from that point of view and then just buying high quality businesses at attractive prices that pay dividend will have a higher probability to succeed in our view.
And that's a key part of your strategy as well, right? I mean, not to belabor my love of the comp screen, but it shows you absolute price change, and it also shows you total return and the difference. Somebody on Twitter yesterday was saying, thanks for including total return. A lot of people leave dividends out. This is a big part of your strategy, isn't it?
Yes, that's correct. And if you think about the makeup of emerging markets, ironically, over 85% of public companies within those 26 countries pay some sort of cash distribution. In the United States, it's less than half. So when you have a sandbox that lends itself to this type of strategy at an individual company level, not only does that help increase total return for our strategy, it lowers risk, and it actually lessens the probability of financial misrepresentations.
Luis, give us an example in 30 seconds of maybe a recent company you added to your portfolio.
So I can't necessarily speak to a specific company, but sectors and countries, there's a company within Poland. It's a software as a service that's a mid-cap company that's done quite well. It's piggybacking on what we're seeing here in the United States in terms of Amazon locker delivery locations, safe drop-off locations. So it's kind of a combination of hardware and software. But again, looking at their return on equity, return on invested capital, they're growing leaps and bounds. And again, they have a high market share within their country. And nobody thinks of a country such as Poland, right, as an emerging market country. But again, there's value where we believe is in specific countries like that. And again, we've been very lucky to find that opportunity and hope that will persist.
Luis, thanks so much for your time. Really appreciate it. Luis Lemus there from Continuous Capital. He's a partner and he's a client portfolio manager there as well. Great to get your insight. Happy New Year to you as well and your family, Luis. We hope you have a healthy and happy New Year. And that's it for me. Paul, you have a good one too. I'll see you back here on Monday. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Good Friday afternoon, good New Year's Eve. We have an expanded special edition of Bloomberg Markets for you. We are simulcasting today, as we have been all week, Bloomberg Radio and Bloomberg TV, bringing that to you. Romaine Bostic and Paul Sweeney. We are based here in New York City. Romaine, it is New Year's Eve. I know you're going to be right after the show on your way to Times Square, but before then, let's close out this last year of trading.
Yeah, I mean, you talk about, a phenomenal year, and frankly, a year we talk about that not a lot of people saw coming. I mean, you talk about some of the targets that we saw 1 year ago today here. They were bullish, but not necessarily this bullish, even though we're slightly lower here on a daily basis here. The S&P, NASDAQ, pretty much around their record highs right now as we close out the year.
Yeah, most strategists, I think if you talk to, we've been hearing about this week at least, talking about kind of more single-digit return opportunities for 2022. So we'll see how that plays out. Let's check in with Abigail Doolittle, Bloomberg's markets correspondent, get a check-in on today's market action.
Well, you know, it's interesting because, of course, on this banner year, extraordinary, amazing, as you and Romaine were just talking about, Paul, we do have relatively small moves, not surprisingly, very, very light volume, about 50% less than the 20-day average. It seems many traders may be away from their desks. The S&P 500, interestingly, at session lows, though, but that's a tiny, tiny loss, down about 0.2%. The NASDAQ down a little bit more, down about 0.3% as Microsoft, Google, Amazon, Facebook weigh. We also have the Dow down slightly. Bonds getting a tiny bid. So again, overall, just very, very small moves fitting to holiday trading.
Yeah, small moves here. And of course, so this is probably going to shape up to be one of the lightest days of the year, if not the lightest here. But maybe you can give us some perspective as to sort of what brought us here today, Abigail. 27% run on the S&P 500. And a lot of the other indices out there, particularly like the Philadelphia Semiconductor Index, even outperforming that.
Yeah, you know, that SOX or that Philadelphia Semiconductor Index that you're talking about, a leading index too, especially given the supply chain issues. Very impressive, up more than 40%. The energy index up 47%. The Dow Transport's up 30%. One interesting laggard, though, is that NASDAQ Golden Dragon Index actually down more than 40%. Its worst year since 2008. But most of the index is higher. And speaking of higher, the commodity complex really on fire. That Bloomberg Commodity Index up 27% or thereabouts, the best year since 1979. That has everything to do with oil up 44%, or excuse me, 56%, the best year since 2009. And another big winner that I think that you both were talking about yesterday, coffee up 75%, the best year since 2010. So any way you slice and dice it, almost all risk assets higher in 2021.
Yeah, especially that fancy coffee, Abigail Doolittle. I'm sure we're going to check back in with her a little bit later in the day. We're going to keep this simulcast moving right now and bring in David Spica. He's president and CEO of Guidestone Capital Management, here to help kind of give some perspective as to, I guess, what we saw in 2021, excuse me, and what we can expect next year. David, I'm curious. This was a year where you pretty much could have picked any sector and you made money, whether it was intentional or not, whether it was energy, financials, technology, and everything in between here. When you look into 2022, do you think we'll see a little bit more divergence between some of these sectors?
Absolutely. This year was really a function of continued very easy monetary policy, courtesy of the Fed, plus earnings growth that nobody expected. You said something earlier about how strategists didn't expect the kind of year we had. Earnings were up 45% this year. Nobody called that. And so you had the easy Fed plus earnings growth that really combined to create a very robust market across the board. I mean, it was one of those years where you just threw money at the market and you did well. Next year, things change. A lot of those tailwinds that we had in 2021 are going to become headwinds in 2022. Tighter monetary policy, slower earnings growth and GDP. We're going to have a less fiscal stimulus, so the fiscal cliff comes into play. We could have higher taxes. Inflation is now a significant concern. So all of these things are going to combine to create a much less robust year next year and likely a lot more volatility.
All right, given that backdrop, David, what's an investor to do here? Those are some pretty significant headwinds.
I think you have to be opportunistic. I mean, the last 3 years, the best asset class has been U.S. large cap stocks. The S&P has returned better than 25% on average the last 3 years. You just stick your money in an S&P index fund, you did great. Going forward, you're going to have to be more opportunistic, and I think looking globally makes a lot of sense. Emerging market debt and equity looks attractive today. Developed market equities look attractive. I think real estate investment trusts, even small cap securities here in the U.S., these are all asset classes that haven't participated to the same degree large cap U.S. equities have. And I think there's opportunity there from a valuation perspective, and that diversification is going to be critical as volatility picks up.
As we sort of look at some of the shorter term and interim term issues out there on the horizon, I have to ask you about the COVID crisis, of course, the latest variant, Omicron, and we're not doctors, we're not scientists, so I don't want to get too deep into the medical science behind this, but I am curious about the sentiment right now that we're seeing in the market, that we're seeing in the broader economy, and whether you think that what's happening right now with the spike in COVID cases is enough to really damp down any kind of economic activity heading into the new year.
Well, I'm an optimist, and so I believe that what we're seeing with Omicron is one of the final legs of this disease. Obviously, it's not going away, but this one seems to be much less dangerous. Fewer hospitalizations, fewer deaths, obviously significant spikes. But South Africa, they saw a significant spike, and now cases are trending lower with very low levels of hospitalizations. I'm hopeful that we'll see that here. I think the data is starting to bear that out. We've got vaccines, we've got boosters. I feel like we're significantly better prepared right now than we were a year ago for additional variants. And I'm hopeful that as a country, we can manage it appropriately, and that from an economic perspective, we can remain open and we can continue to see economic growth that benefits all Americans.
Yeah, well, here in New York State, we just got a red headline across the Bloomberg terminal. New York State extends mask and vaccine mandates until February 1st. That's according to the governor of New York. So again, everybody's still trying to deal with that as we go forward. So David, we have that backdrop. We have some of the headwinds. What's the risk in your mind that this Federal Reserve throws the market a curveball and maybe raises rates perhaps more and more aggressively than the market's discounting? Is that something you think is material risk?
Fed policy in our mind is the absolute biggest risk to the markets next year. So there's a concern, appropriately so, that maybe the Fed's a little bit behind the curve. We got inflation running at almost 7% with the Fed funds rate still at 0. And the Fed is now indicating that they're likely to raise rates 3 times next year. But first they have to end the tapering, which concludes in March. So at that point in time, if inflation is still running at 7%, the Fed's probably behind the curve, and they're going to have to play catch up. If that occurs, the market is not going to respond well. Historically, with inflation running just between 2 and 4%, the PE multiple on the S&P 500 has been around 17 times. We're trading at 21 times today. Couple that with the fact that we've got a midterm election year, and historically you've seen an average 19% drawdown during midterm election years. I mean, there's a lot of things going on out there. The Fed can't manage appropriately, but yes, ultimately it's inflation. And does the Fed have the ability to thread the needle and have a number of strategic rate hikes that do enough to mitigate inflationary pressures so that the market can see through that? Even if that happens, there's going to be additional volatility. But in our mind, that would be the best case scenario.
Yeah, threading the needle. That's definitely going to be sort of the acrobatics that they're going to have to pull off here in 2022. Let's talk a little bit about some alternative assets here and the idea of how you structure or portfolio in this environment, particularly if you're trying to diversify to some degree away from equities or away from some of the riskier assets out there.
Well, today the impact of this aggressive monetary policy is it has forced investors out on the risk curve. With the 10-year treasury at 1.5%, with investment grade bonds yielding a little more than that, and even high yield bonds not a lot higher, investors have had to go into equities and riskier asset classes. So they've kind of been forced there. And as I said earlier, we've seen that pay dividends over the past 3 years, with the S&P 500 up over more than 25% on average. Going forward, though, you're going to have to look at other asset classes. Emerging market equities have had a negative performance this year, largely because of what's happening in China. But if you're a long-term investor, you've got to like the opportunity set there. I still like real estate investment trust. If you think about what drives real estate valuation, it's low interest rates and it's demand for real estate. With inflation being an issue, a lot of investors are going to look at real estate as a way to offset the impact of inflation on their portfolio. So real estate investment trust, even though they've done very well this year, still look attractive. And then going back to what I said earlier, small cap stocks had a decent year, but nowhere near what we've seen with large caps. If the Fed is able to appropriately manage inflation next year and the economy can continue to expand, small caps are in a great position to rally.
Hey, David, thanks so much for joining us. Really appreciate getting your thoughts, getting your perspectives on these markets as we head into 2022. David Spica, President and CIO of Guidestone Capital Management, located in the great state of Texas. We're going to have more coming up. We're going to get some more looks at this market, more previews for 2022, get a sense of where opportunities are. A lot of folks think it's going to be tougher next year than this. We'll get the preview. This is Bloomberg.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
What do we know and what don't we know? Because there's a lot of speculation, a lot of anecdotes circulating right now.
Omicron definitely has the characteristics to create us concern for many reasons. But also we have been preparing for a moment like that for months right now. And I feel comfortable that the playbook will work. So what is the playbook? One, it is to understand more about this virus. The second, of course, will be to protect against infections. And the third is to treat. Let's take it one after the other to understand. I think there are a few things that are not very clear yet with Omicron. One, it is the clinical manifestation of this new variant. Is it creating more severe disease or not? Is it transmitted easier or not? Is it going to younger or older people? All of these are things that, as we see clinical cases coming out and the numbers are getting bigger, that's something that we will know in a few weeks.
Protesters breached the Capitol.
Container ship blocking the Suez Canal.
Types of crypto coins. Crackdown on tech in China.
In the billionaire space race.
Delta variant.
The chip shortage.
And rising energy prices.
The Omicron variant has triggered.
This is Bloomberg Market special coverage this week here, a simulcast on Bloomberg TV and radio. I'm Romaine Bostic alongside Paul Sweeney, keeping an eye on the markets and keeping an eye, of course, on a telephone call, a 50-minute telephone call between President Joe Biden and Vladimir Putin yesterday here. We've gotten word already from, at least from the Russian side, that they're, quote, satisfied with what transpired on that call. And we've also gotten a little bit of perspective here from the White House. Let's get some perspective from Marty Schenker, editor-at-large here for Bloomberg News. Marty, what did we hear out of the White House with regards to how they interpreted what happened on that call?
Well, I mean, they stressed the idea of unity with the European allies. And Anthony Blinken just moments ago reiterated our desire to make sure that we don't do anything to alienate our European NATO partners. So they made it clear that negotiation is something they want, but that they will take steps if the Russians act aggressively against Ukraine.
Marty, how united is the United States with its NATO allies? Again, after the last administration, things got a little dicey there. Where are we in terms of maybe, putting up a united front vis-a-vis Russia?
Well, I do think that Joe Biden made it clear that one of his aims was to repair any damage the Trump administration had done to NATO and our alliances. And he did not get off to a good start with how we handled the submarine issue with France. And he had to do some damage control of his own. But I do think things have been much better in recent months. They've taken real steps to try and reassure our partners in Europe. And again, they've taken a united stance against Russian aggression in Ukraine, while stressing they do want to have negotiations be successful.
I'm curious about the sort of loose ends with regards to the Nord Stream pipeline, which for at least a lot of European nations is going to be pretty vital, assuming that it actually gets approved and they allow the gas to start flowing here. Is that going to be part of the talks, particularly the bilateral talks that we're going to see starting, I think, in a week and a half in Geneva?
Well, the three sets of security talks are designed to address issues of common interest. Clearly, Nord Stream and the gas that flows through it is of exceedingly importance to the Europeans, where natural gas prices have hit record after record. And they are really going to be depending on that gas, which in turn causes some concern in the U.S., where we don't like to see our European allies so reliant on an adversary, and Russia is an adversary. So it may not come up specifically, but it is essentially the gorilla in the room.
All right, Marty, thank you so much for joining us. We really appreciate getting your thoughts and your perspective. European geopolitics, it's coming up more closer to the front burner here over the next several weeks. Marty Schenker, thanks so much. Let's switch gears, get to this kind of the back to work story here. We've had a lot of the investment banks, a lot of the big financial institutions have been more on the aggressive front in bringing people back to the office, but now we've got the Omicron variant, and that's causing a lot of folks to reconsider that. Just a moment ago, we had New York State say, hey, we're going to extend our mask and vaccine mandates until February 1st. Let's bring in Madison Mills from Bloomberg. Quick take. She's been following this story. And Matt, I know, like, for example, B of A, a huge employer here in New York, as well as across the country, saying maybe not so fast. What's the latest?
Yeah, we're seeing a lot of banks and employers taking this approach of basically recognizing that tonight and after the past holiday weekend, we're going to see a huge spike in cases. And I just want to remind you that we're already in the midst of a surge, with the globe hitting over 2 million cases for the first time ever yesterday. The U.S. reaching a caseload twice in a row of the highest ever case count that we've had so far in this pandemic. Here in New York City, 1 in 4 people currently have COVID. So these numbers are really alarming, and employers are responding by basically accepting that there is going to be this surge, especially following gatherings that people are going to have this evening, and saying, look, we get it, you're all going to probably be spreading this tonight, so just don't come in next week. And employees themselves are kind of taking a proactive approach here. We're seeing that across the U.S., less and less people are going into the office. We have some incredible reporting on this from our own BNers here at Bloomberg, showing that there's been a 40% drop-off in in-person work over the past week just here in New York. We're seeing this in Austin and Miami, across the country. country as Omicron continues to spread, and employees are worried that 8 hours in a workplace isn't the best way to spend time right now with the surge of this new variant.
But we should be clear, Maddie, that some of the language that we're hearing out of some of these banks, including JP Morgan and Bank of America, is that the long-term plan to get everyone back in the office face-to-face, that's still there, and that this reprieve is just that, a temporary reprieve.
That's very true, Romaine. And look, I think a lot of people are really hoping that we're going to see here in the U.S. what we've seen in South Africa. We're seeing there that there was this huge surge and then a really big drop off. We're seeing infections drop there at a rate of 30%, which is very exciting. Unfortunately, I hate to be the bearer of bad news, but it's summer in South Africa. That's obviously always a big factor in getting cases down. We're in the middle of winter here in New York, and people are going to be gathering together inside more frequently, especially as we see events canceled. You know, I remember talking to Dr. Fauci about this. Of course, it's great to decrease the number of big events that are going to draw large crowds, but the downside to that is that it draws people indoors. You're going to see a lot of people going to each other's houses, and that's where you really see these big spikes come. So it's still something that we need to monitor to see if we can have the same situation that happened in South Africa. There, we saw a surge over the course of 4 weeks and then a 2-week drop off. Here in the U.S., we're about a week out from that. So this next week following New Year's is going to be the one to watch to see if we can have the same situation that they did in South Africa with a drop off in cases.
All right, well, everybody needs to be safe out there. Madison Mills of Bloomberg Quick Take, of course, joining the big simulcast today here on this New Year's Eve. I'm sure we'll catch up with Maddie a little bit later here in the day. We're going to keep an eye, of course, on what's going on with COVID, a conversation with Dr. Andrew Pickosh of Johns Hopkins University. We're going to hear what he had to say coming up shortly. This is Bloomberg.
Protesters breached the Capitol. Democracy has prevailed.
A flash mob decided to take on the shore.
Giant container ship blocking the Suez Canal.
1,000 new types of crypto coins.
Crackdown on tech in China.
In the billionaire space race.
The Delta variant of the COVID virus.
Evergrande is the most heavily indebted developer.
Of the chip shortage.
Withdrawal of U.S. forces from Afghanistan.
We did not get everybody out.
Songs you love.
Rising energy prices.
In Europe, it's a huge crisis.
The Omicron variant has triggered a global
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
How will pricing have to adjust or not as a result of your greener ambitions?
We ran a big survey around 32 countries. More than 30,000 people took part. And as you say, there was a big gap in between people that were worried about climate and people that were taking action.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
This is Bloomberg Markets here on this Friday afternoon. A global simulcast right now across Bloomberg TV and radio. Romaine Bostick alongside Paul Sweeney, keeping an eye, of course, on what's going on with the COVID variant. Johns Hopkins University professor Andrew Pickosh, he was actually on Bloomberg a little bit earlier today saying that the number of Omicron cases, in his word, are staggering. He spoke with our very own Matt Miller. Take a listen.
It's important to note that the total case counts, the official case counts, are staggering, and they're probably underestimates of how many cases of COVID-19 are going on in the country right now. It's been very difficult to really predict on a weekly basis how cases are going to go. There's some data out of South Africa showing that the surges have fallen off as fast as they increased. Hopefully that's going to happen in other places as well too, but it's really staggering the number of cases that we have. Important to note also that hospitalization rates are going up because of just the total number of cases that we're seeing.
So we've heard this as well from UK officials, that the estimates are likely, that the numbers that we're talking about are likely underestimates by a factor of 2 or 3. It wouldn't surprise you, when I say we had 2 million new cases globally in one day, it wouldn't surprise you if the real number was 5 million or even 10 million.
Absolutely not. I think all of us have heard people who are sick. The idea that the home tests are probably not being reported as effectively to public health officials as tests from a hospital or from another testing center would be. All of that is contributing to a real undercount in the number of cases that we're seeing, outside of obviously hospitalizations and deaths, because we can get pretty accurate numbers on those.
It's also, of course, New Year's Eve today. Happy New Year's Eve to you, Dr. Pekaj. I'm wondering how comfortable you would be going to a bar, a big festivity, a crowded place to celebrate New Year's Eve if you are fully vaccinated with a booster as well.
Well, I think given the number of cases and the fact that so many individuals are now sort of homesick and not working and not contributing to some of the things in society, I would be very cautious about going out to any event that has a large number of people there too. Again, vaccines are protecting us against severe disease, but it's not protecting us as well against symptomatic disease. And so if you get sick, you'll be out of work for a few days and out of touch with other things for a few days. And that is what's sort of taking a larger toll on our society right now than even the deaths. The number of people that are out sick, particularly here at the hospital and in other places, is really taking a massive toll in terms of how things can function.
Doctor, talk to us about the testing piece of it all. I'm going to throw you some numbers here. Over 300 million people in the United States. Joe Biden talking about requesting 500 million rapid tests to households. If you just do some very quick math here, that's less than 2 tests per person. How often should people be testing, and how much of that should be a factor just considering the size of this country?
Well, you know, in an ideal situation, if you're coming in contact with people on a regular basis, like going to work and those kind of things, ideally, you'd love to be able to take a rapid antigen test or something like a saliva test once or ideally twice a week. That is impossible right now because of the large number of tests that are being focused on people who are symptomatic. If you can get your hands on home antigen tests, it's nice to be able to give yourself a test before you go out to any kind of large event. Anytime you feel symptoms, it would be good to take a rapid antigen test at home, because the sooner you take yourself out of circulation, the less cases that you'll potentially lead to, because you won't put yourself in a position where you can transmit to people. But those ideal situations are just impossible to do right now because of the backlog in tests and the unavailability of testing, particularly here in the U.S.
All right, that was Dr. Andrew Pekaj at Johns Hopkins University. We've been so fortunate here at Bloomberg Radio and TV to have access to some of the leading scientists and physicians around the country, around the world, quite frankly, including those down in Baltimore at Johns Hopkins University. Not just great lacrosse down there, but some of the leading scientists and doctors, and we're fortunate to get access to them. Looking at the markets here, just a little bit of red on the screen. Last trading day of the year. It's been a heck of a year. We'll have more coming up. This is Bloomberg.
prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
All right, we are back. New Year's Eve, Bloomberg Market Special Edition. We have simulcast, Bloomberg Radio, Bloomberg TV, Romaine Bostick, Paul Sweeney. We are in New York looking at these markets. Just a little bit of a pullback, Romaine, but you really got to put that into context and just what a heck of a year for the S&P 500.
Yeah, a massive year, basically, for anybody who started at the beginning of the year and held to the end. Even if you got in the middle, you did pretty well.
Yeah, exactly. And I think what we're hearing from a lot of folks is, you know, probably more muted expectations for the coming year, but still, a lot of folks are still constructive. One of the big wild cards, and we've highlighted some headwinds, Romaine, is Washington, D.C., is what's going to come out of Congress, what's going to come out of this administration. So when we want to get a look at D.C., we go to Terry Haynes, Pangea policy analyst. Terry, give us a sense of kind of the to-do list. I know Congress comes back next week. Maybe they get to work the following week and how all that plays out. What are you looking for out of Washington, D.C. next year?
Short answer, Paul, is not very much, really. I think an awful lot of the congressional energy gets put into the midterms, as you would expect, not just because they're midterm elections, but because the margins are so tiny. You know, you have about a 4-seat majority in the House and effectively a 0-seat majority in the Senate, as everybody learned over the last year or so. You know, what I'm looking for really is kind of 5 things that affect the markets more than anything else. The first is what I call the politicization of the regulators. This comes up really with the Fed first and foremost, because I'm not sure how you know what Fed policy is going to be when you've got a majority of the governors that have been, either renominated or not yet nominated. That's a problem. And then you've got all kinds of other things that have market implications, ranging from the Federal Trade Commission's war on tech to what the SEC might do with ESG, all kinds of other situations. So I think that's number one. I think you've got the
well, Terry, can I just jump in here? Because before you go to the number 2, because with regards to the regulators, a lot of people are concerned, for lack of a better word, about what could happen. We see some of the stasis in Washington with regards to the legislative process, but we know these regulators, to a certain extent, have a lot more sway to be able to change rules in a way that doesn't necessarily have to go through the sausage grinder that is Congress. Do you actually think that, like Lena Khan at the FTC and over at the CFTC and some of the proposals that they're doing are really going to make it to see the light of day?
Well, I think what they will, Romaine, and thank you for bringing that up. I think that they'll push real hard to try to make something happen. That alone will cause, I think, some market heartburn and some market angst. I think we're a ways from understanding whether or not they're going to get majorities. I think Ms. Khan at the FTC, for one, is about to learn that she runs a five-commissioner agency, and the other 4 commissioners will have their own views as well. Once upon a time, I was a senior person at a federal regulatory agency, and the saying was, sometimes you have to tell the chairman to take his or her 90% and go home. You don't get everything you want by any means. That, frankly, will roil markets more because of the uncertainty. But yeah, you're absolutely right to bring that up, and I think that's a big problem in 2022 for markets. Sure.
Hey, Terry, how about this Build Back Better or just a policy spending bill? It was derailed a couple of weeks ago. What's the shot of this coming back in some form here with this new Congress?
I continue to think that Build Back Better is about 60% likely to happen, but it comes back in this really, really tiny sort of form. As we've all followed the bouncing ball, Build Back Better is basically 3 times less from where Democratic progressives started out and what they really wanted. So I think they get something in the end. I mean, even after Manchin said no, then he continued to try to negotiate. The Democrats want something to show that they've achieved something. They're to the point now where they almost don't care how small that thing is. So I do think they end up with something. But the economic impact of it, and I'm very different than a lot of economists out there. The economic impact of this is going to be really, really tiny. And the most recent jobs report, I think, frankly, showed that. The things are going a lot better without additional government intervention. So the need for a lot of the things that they wanted at the beginning, frankly, just aren't there anymore.
Terry, I want to pick your brain here on some of the foreign policy issues. There were a lot of loose ends coming out of the Trump administration into the Biden administration, with maybe the exception of the pullout in Afghanistan. A lot of those loose ends really didn't get tied. We're heading into 2022. We've got a big bilateral summit coming up between the U.S. and Russia, and another formal talks between the U.S. and China. What are you expecting? Do you think we'll see any sort of resolution to some of those conflicts this year and next year, excuse me?
I don't think we're going to get resolution, Romaine, but what I do think is we're going to go through a year that will also, I think, have market impact, where there's a lot of probing and poking of the current administration and exactly what they intend. If you look from a non-U.S. perspective, what you may see is a growing sense of crisis of confidence and competence. And the 3 things I would bring up most recently, frankly, are the way that COVID is being handled. We're behind the curve on testing. We're behind the curve on understanding variants by the Vice President's own discussion. Firstly. Secondly, you've got this whole business with supply chain, which the government says it wants to sort out, but of course, I think really can't. But they want to claim credit for it wherever they can. And then you have the overlay of how we got out of Afghanistan, regardless of whether we should have been there in 2021 or not. How we got out was something that looked like weakness to a lot of other countries, and I think we get probed and poked a lot, whether or not it's the current Russia-Ukraine business, whether it's China and Taiwan, whether it's the Iranian nuclear deal, just to name 3, and then we've got North Korea, as always, coming up on the outside too. So there's going to be a lot of balls in the air for the administration, and I think that's going to. I think, frankly, that's going to roil markets, and it's going to roil foreign policy for the United States too.
Terry, lastly, 2022, it is an election year, likely to be some changes in Congress. How do you think investors should think about that towards the end of this year?
Very simply this, Paul. There's the most misused word politically in Washington and outside of Washington is control. Majorities in Congress do not equal control, as we can see right now. But the Republicans probably have the better of it here 10, 11 months out going into the midterms. But even if they gain majorities, those majorities are not going to be huge. They're not going to be overwhelming. They're certainly not going to amount to control of an agenda or the ability, to go back to where we started, the ability to hold back regulators that are appointed by the Biden administration, it's not going to amount to any of that. So it's not really that consequential, which I think is non-consensus. Where it might become consequential is if the President Biden decides that he's made a mistake in his first 2 years, siding a lot more with his progressives, which may have the majority in Congress, but it represent only a tiny sliver of the country. I mean, Pew Research recently did a bit where they showed that about 10% of Democrats identified as progressives. So, if the midterms come in, kind of big Republican and certainly yielding Republican majorities, Biden's going to have the opportunity to shift to the center if he wants. That may prove consequential in a positive way for markets, but otherwise, the majorities alone won't.
And does that mean, though, we end up with some sort of stasis with regards to the legislative process? I mean, more stasis than we've already had?
Oh, I think so. Yeah, there's not the will or the votes for huge consequential matters. But there are things that can be done on the side. I do think that one impetus behind the Build Back Better continues to be the child tax credit. One thing I would really look out for in the markets is the possibility of some action on prescription drug price regulation, because Democrats very much want to do it, that sort of thing. But as far as these broad sweeping COVID bills or Build Back Better, huge Build Back Better bills, these kinds of transformational things are not on the cards for some time.
All right, Terry, always great stuff with you. Be safe. Have a wonderful new year. We'll catch up with you next year, early next year, I'm sure. Terry Haynes there, of course, Pangea Policy founder there. All right, we got to talk a little bit more about what's been going on with a lot of the bars and restaurants and the hospitality industry out there, particularly here in New York City. It was finally starting to get back on its feet. And, of course, the Omicron virus, the Omicron variant, I should say, putting some of those plans in jeopardy. We're going to discuss that coming up after the break. This is a simulcast on Bloomberg TV and radio. We'll be back in a moment.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali, sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu, sama aja. Belum ada turis ke Bali, masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Protesters breached the Capitol.
Democracy has prevailed.
A flash mob decided to take on the short.
A giant container ship blocking the Suez Canal.
10,000 new types of crypto coins. Crackdown on tech in China.
In the billionaire space race.
The Delta variant of the COVID virus.
Evergrande is the most heavily indebted developer.
Of the chip shortage.
Withdrawal of U.S. forces from Afghanistan.
We did not get everybody out.
Songs, you lie.
Rising energy prices.
In Europe, it's a huge crisis.
The Omicron variant has triggered a global rush.
All right, good New Year's Eve afternoon. Special edition of Bloomberg Markets here. We're simulcasting radio and television. We'll be doing it all week, giving you the breakdown on this last week of trading. Also, trying to do our best to give you some good previews from really smart people on what to expect in 2022. I saw an interesting headline just crossed the Bloomberg terminal. Bridgewater gains 7.8% in December as one big month saves the year for Ray Dalio. So a heck of a December, Romain. A lot of people took advantage of it.
Yeah, I mean, look, you see some of the gains in the way that some of these funds were able to bounce back. I mean, we should still point out the type of performance that we saw early in the year really called it into question. A strategy, of course, that Dalio pioneered and, of course, was profitable for him and his funds for so many years. It'll be interesting to see how that carries over into next year.
Yeah, I saw some Bloomberg reporting best December since 2010. So a strong end to the year. All right, I'll tell you what's also making a strong end to the year is his Omicron variant really dealing a blow to a lot of people's New Year's Eve plans and just plans to get together. You know, I think back to JP Morgan canceling their big healthcare conference in San Francisco a few weeks ago. That was really a sign that Omicron is here and it really is discouraging big gatherings. And here in New York City, you know, there's a lot of big places that we're looking forward to a New Year's Eve with a lot of people, and that's not going to happen, or at least it's going to be on a smaller scale. Allison McNeely, Bloomberg News, joins us. Allison, what's the story for some of these venues?
So this year was really supposed to be a year of recovery for many of the hotels, restaurants, bars, tourist attractions in New York City. Obviously, we saw restaurants and bars shut down for several months in 2020 due to the pandemic. So 2021, with people getting vaccinated, was supposed to, kick off this strong recovery, better days ahead, people gathering in groups, people traveling. But now what we're starting to see is with this new variant, parties are getting canceled. We saw Broadway shows get canceled.
Yeah.
We're seeing flights get canceled. And that's really having an impact on many of these venues that were relying on a strong year and a strong holiday season as part of a broader turnaround.
Yeah, and a lot of them
from
were really
the pandemic.
Yeah, and a lot of them were really struggling even before the latest variant came out. I mean, one thing that you highlighted in your story is the Standard Highline Hotel, which is a big hotel down lower Manhattan here near the Whitney Museum. Beautiful hotel. I mean, it's like a perfect location, great restaurant on the bottom, great bar on the top, overlooks the Hudson River. But if you got no tourists coming into New York City, you're not going to have much of a business. They're in foreclosure right now, aren't they?
Exactly, yes. So what we're starting to see now is some of these properties where, during the worst days of the pandemic, their lenders were saying, all right, we'll give you a bit of a break on your debt. We'll give you more time to pay us back. Those lenders are now running out of patience. They're also potentially running out of cash themselves to be able to keep giving these properties more time to recover. And now we're starting to see foreclosures happening, such as at, that hotel where the lenders are simply looking to get out because they can't be involved anymore.
Yeah, Allison, I think about some of the big event spaces here in New York City, like Cipriani's, for example. Fantastic space both in Midtown and downtown. And I've been to so many events, particularly the Midtown space there, where you get hundreds of people together, jammed in there, the tables right next to each other, 10 deep at the bar and all there for various functions. What's that type of venue? How are they reacting? How are they faring here? It's got to continue to be very difficult.
Yes, so Cipriani is perhaps the perfect example of, this effect on commercial real estate from the pandemic and, the intersection with Wall Street. That's a very popular venue for Wall Street events, parties, galas. And that property is also, facing financial trouble. It's currently in default on a mortgage backed by two of its New York properties. And it's going to have to try and figure out how it can work that debt out, whether it can reach an agreement with its lenders, whether, somebody else will step in to provide additional financing because, those major events are really the lifeblood of a venue like that. And when, people aren't coming in the door for Christmas parties, that has a significant impact on the bottom line.
Well, what about some of these sort of, I guess, private clubs or semi-private clubs? We know the 21 Club shut down. The Princeton Club, they're still kind of trying to figure out exactly how they're going to go forward. And I'm told that Eric Schmidt, formerly of Google, might actually be riding to the rescue.
Yes, exactly. So that could be a perfect example of a rescue story here. Princeton Club has been shut down for months now. It lost about a third of its dues paying members, during the pandemic, and now Eric Schmidt is reportedly considering bidding for the property, or has bid on the loan, and may be able to sort of be that white knight and step in and rescue that property and rescue that club so it can continue operating. But the big question that we'll be thinking about in 2022, and what we'll be looking for, is whether or not we will see more white knights like that step in for some of these iconic New York institutions, or whether they might go the way of some of the other ones that we've seen that have already closed. 21 Club has already closed, but it remains to be seen what will ultimately happen with that property. Will its current owners sell it? Will they try to open it in a different form? Will they find additional financing? It remains to be seen.
Allison, is there any optimism out there when you talk to some of these hotels and event spaces? I mean, perhaps the South Africa news can give some optimism, i.e. this will be a relatively short duration of a variant.
That's exactly right. The optimism that we have here is that the current variant, at least compared to previous variants that we've seen, is it looks like it's having milder symptoms with people, which means that people aren't, forced to quarantine or change their habits for as long. It looks like the impact of the variant overall in terms of, sort of the period in which it spikes and then recedes is now shorter. So overall, it seems to be less severe. I think that has people hopeful that, as we move into 2022, we will see some of these properties pick up speed. We will see some resumption to a return to normal, if we can even say that at this point anymore, that we will hopefully see something resembling that in 2022. Another big piece for these properties that I should mention is also business travel. We have seen some return of tourism, of leisure, of family vacations, but we haven't really seen folks getting on airplanes to go to conferences, to go to business meetings in the same way that we used to, because, we're all on Zoom now.
Yeah, well, speak for yourself. Allison, have a wonderful New Year's. We'll catch up with you soon. Allison McNeely with a nice little eye on the ground here in New York City about some of the restaurants and event spaces struggling to remain open here. Next up, we're going to take a look at travel. A lot of people are trying to travel this weekend and beyond here, and it's off to, a little bit of a bumpy start here. We're going to talk about the thousands of flights being canceled here once again here on this Friday, and of course for tomorrow as well. The simulcast, Bloomberg TV and radio. Paul Sweeney, Romaine Bostic. We'll be back in a moment.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
answer is breach the Capitol.
Container ship blocking the Suez Canal.
Types of crypto coins. Crackdown on tech in China.
In the billionaire space
The
race.
Delta variant.
Chip shortage.
Rising energy
It's a
prices.
huge crisis.
The Omicron variant has triggered.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights
David, you just hit the nail right on the head.
from businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
This is Bloomberg Markets, a special simulcast across Bloomberg TV and radio. Romaine Bostick here alongside Paul Swinney. We're sticking with you here on this New Year's Eve here, an eye on the markets and, of course, an eye on everything else that moves the markets. Right now, we are keeping an eye on travel, holiday travel. A lot of folks still trying to get to and from wherever they're trying to go this New Year's weekend, and, well, is not off to a good start. Tony Robinson, Bloomberg editor, joining us right now to talk a little bit more about what's going on and why. Is this all because of labor shortages?
To a large degree, yeah. I mean, there's always weather affecting travel and spots here and there. Yesterday, for example, there were bad rains in Atlanta. We've got some snow in the west that's developing, and that'll slow things down. But Omicron is the bigger factor here. It's cut down staffing at several of the airlines, not all. And that's making it difficult for them to keep up. They are getting ahead of issues as much as they can. A lot of these cancellations yesterday and today came early in the morning. We hit 1,000 by 9 or 10 this morning, and it has slowed down the pace of cancellations because they want to give travelers time to prepare and make alternate plans. So it's not widespread all over the system.
Tony, what's the solution, if there even is one? I mean, if you don't have the people to fly the planes or clean the planes, there's not much you can do, can you?
Well, what they do to some degree is they'll consolidate. They'll move to bigger aircraft, push flights, that might have been separated by several hours, and a lot of people get from two different flights. They'll get on one flight, and that'll help. But there's not a lot you can do if people are out because of isolation, because if it's tested positive. The main thing they do try to do, as I said, is try to give passengers some advance notice. You don't want to get told. It's a lot easier to be told 4 hours in advance that your flight's been canceled, and you can make other arrangements. And bigger planes might hit the schedule than to be told an hour in advance or less. And so they're trying to do this to minimize the pain for travelers as much as they can, get out in front of it.
Yeah, and we've seen demand was high, and of course the actual capacity even going into this was actually low, or at least lower than what it was pre-pandemic. We're focusing a lot on the U.S. flights. What about overseas? I mean, I've seen some stories on the terminal that basically says there are some countries you can't even fly into, other countries in Europe that are now starting to shut down.
Yeah, it is harsher in parts of Europe and Asia where lockdowns are more prevalent than they are in the U.S.
Yep. All right, Tony, thank you so much. We appreciate it. It's a developing story. I'm not sure there's a solution per se. This might be one of the industries that just kind of has to ride it out, and everybody's going to have to be flexible here. Tony Robinson, Bloomberg.
Well, you can always
News.
rent a car.
What's that? Yeah,
you can always rent a car, right?
Always hop in a car. Good luck finding that and not paying through the nose. So we'll see how that plays out. But again, a lot of travel coming up this weekend and over the next couple of days. We're going to have more coming up. This is Bloomberg.
front, when your shares are down 20%, it's got to hurt. But talk to us about, well, really what you're seeing. Take us more forward-looking. Are you worried about people exiting pandemic era and going back to the gym, or are we going to work out at home more?
Well, that's actually the advantage that Beachbody has is we have never been a direct competitor with the gym. In fact, what we rely on is our ability to influence the 150 million people in North America specifically who are overweight or obese and haven't made that choice yet. Our job is to influence them with great content and this combination of what we call the total solution: fitness, nutrition, and community, so that they can tap into this incredibly cost-effective solution that is entertaining and engaging right at home so that they get results. That's our job, is to help the new person engage in healthy lifestyles.
This is Bloomberg Markets, a special simulcast across Bloomberg TV and radio. Romaine Bostic alongside Paul Sweeney. Paul, you talk about the markets on a daily basis right now, of course, basically unchanged. Volume is minimal, to say the least here, but it was still a very strong month, a very strong quarter, and it's going to be a strong year with the S&P up about 27%.
Yeah, it's just been extraordinary. And again, and who would have thunk it a year ago? But it's what I find interesting is just what a really strong year end we had in the month of December, one of the best Decembers we've had in a very long time. So setting us up for what, we'll see what happens in 2022, but, extraordinary gains here for those that had the, as Tom Keene would say, the risk to be, or the, I guess, the fortitude to be in the market.
Yeah, one of our earlier guests talked about you basically could have picked anything this year sector-wise and pretty much made money off of it. Abigail Doolittle standing by with a little bit of a closer look here as to what we're seeing in the markets. Abigail.
Well, on the day, to your point, very, very small moves, minuscule, and on light volume. But on the year, huge gains. It's an extraordinary year, risk-on year, as we all have been talking about this week, really. The S&P 500, as you were both just mentioning, up 27% on the year. The NASDAQ up about a commensurate amount. The Dow up a little bit less, but still up 19%. Each of these averages up 3 years in a row. One index that we are not taking a look at this moment, but I can tell you the Russell 2000 up about 14%. So still a double-digit gain, but underperforming large cap. So this was really the year of large cap more so. And at this point, a 13% differential between the S&P 500 and the Russell 2000. An interesting move after last year, the Russell 2000 climbing so much.
Yeah, Abigail, I looked at the numbers you just had up there, and I'm just saying, buy an S&P 500 ETF and just, look back 12 months later. But when you dig under the, in the layers, there's a lot of outperformance, underperformance within that 27% gain.
There certainly is. And this year was the year of both the cyclical trade and the growth trade, because the best sector on the year, energy up about 47%. Real estate was there too, which is technically a growth sector. And then tech, interestingly enough, about 33%. Its best year since I think last year, actually. I'm thinking about the financials, up about the same amount, the best year since 1997. And in terms of some of those individual movers, the heavyweights to the S&P 500, the NASDAQ, your Microsofts, your Apples, your Googles, your NVIDIA. Microsoft, in fact, added almost $1 trillion in market cap this year, more precisely $870 billion. But that's just an incredible move in 1 year. especially considering that it's actually been up 3 years in a row. So just an incredible run for stocks this year. The big question is whether or not it can last into 2022.
All right, Abigail, we appreciate it. As always, Abigail Doodle giving us the market, kind of overview here. Again, strong performance in 2021. Let's take a look to 2022 as we like to do, particularly this week. We can do that today with Mark Chandler, Chief Market Strategist and a Managing Partner at Bannockburn Global. We talk to Mark quite often to get his thoughts. And Mark, as Abigail was just outlining for us, boy, most asset classes had a pretty good 2021. How are you thinking about next year?
It's quite amazing, huh? I mean, you talk about risk on, and yet in the foreign exchange market, the dollar ruled the roost. It appreciated against almost all the major currencies. The Canadian dollar's had a bit of a rally here into year end, closing a bit higher on the year, but the dollar strengthened against emerging market currencies as well. And typically you don't see that in the risk on environment. What I'm concerned about for next year is it seems like so much good news is priced in. You talk about the stock market being up the third year in a row, strong dollar has really rallied. You said before, like who would have thunk it? The dollar bottomed this year at the same time we had a riot on the Capitol. And the dollar has been trending higher, and so a lot of market positioning is also very extreme. A lot of good news is priced in for the dollar. 3 rate hikes by the Fed next year, so it's hard to see better news coming forward.
Yeah, well, I mean, when we talk about the dollar, we look at the market through the lens of the dollar strength here. Isn't part of that, Mark, also, I guess, how people view non-U.S. countries, pretty much the developed nations I'm talking about, and the relative outperformance that the U.S. has had, not only as a market, but as an economy?
Yeah, no, I think you say something that's true. I think that the strength of the U.S. economy, but again, the reason the U.S. economy was strong, it wasn't just that, it's not just that we're all hardworking in the United States and everybody else isn't. What's really driving this is a huge fiscal commitment that we haven't seen in other countries. And so the price of that stronger growth and that outperformance is 2 things, really. Partly it's higher inflation, and secondly, it's a higher budget deficit. And I think that these are going to combine and really still offer the Achilles heel to the dollar, and that is what we call the twin deficits. We just had earlier this week a record trade deficit. We have a very large current account deficit. And that's why I think that the U.S. is going to have higher interest rates, which the Fed, like I say, the market's pricing in 3 hikes by the Fed. We're talking here at the end of the year with almost 7% inflation, 1.5% yield on the 10-year bond. And I think to your point, what's happening overseas, of course, is that there's about $12 trillion of negative yielding bonds.
Yeah, Mark, it's interesting here. You talk about this dollar strength story. And quite frankly, I can't see a bear story out there for the dollar. But where else do you see in the currency markets, do you see perhaps some opportunities heading into 2022?
I think some of those currencies, some countries are really ahead of the Federal Reserve in the interest rate cycle. I still like Canada. Canada has a combination of less tight fiscal policy and probably tighter monetary policy. In the last couple of weeks, it looks like the market has shifted towards expecting a Bank of Canada rate hike in March rather than, say, Q2. As I like Canada, I think that the UK is also very interesting in the sense that they've had a lot of problems this year, but the Bank of England is likely not only did they raise rates earlier this month, but they will likely be the first central bank to allow its balance sheet to shrink. And I think that the market's going to like that. And the other country that's kind of interesting, I'd point out, is Japan. We're finishing the year, dollar yen's above 115, and we could go higher. I find that the best factor, the best single driver of the dollar yen relationship is really the U.S. 10-year yield. But Japan is the only country that the OECD says will have a larger budget deficit in 2022 than they had in 2021. Everybody else is going to be cutting back on fiscal spending.
Yeah, it's interesting the turnaround or the attempted turnaround in Japan right now, particularly when so many people were trying to draw some parallels between what's happening in the U.S. and whether we were sort of headed down some sort of stagflation path that we saw in Japan. Do you see any parallels there that maybe could guide investors?
I don't know, everybody, since the great financial crisis over a decade ago, people have been talking about how Japan's our future. I'm really not convinced that's the case. for a lot of reasons. You know, one interesting thing here, I think that goes unnoticed, is that while the U.S. is struggling with, as I said, 6.8% CPI, Japan, which has a debt to GDP ratio of over 200%, the central bank's balance sheet is the largest in the world, and yet they still have deflation. The GDP deflator in Japan fell by about 1.1% in both Q2 and Q3. And if you exclude food and energy, Japan still has deflation. And so I think that we're very far from that. And so I'm not sure that we're going to be able to learn from Japan. And I think that in this sense, we in the U.S. are our own worst enemies.
Hey, Mark, what are the opportunities for an investor who's willing to take on some incremental risk in emerging markets?
Yeah, you asked a good question, because I think that emerging markets are very exciting. And of course, the trade-off for the greater return is the higher volatility. So you get like a currency like the Turkish lira, which is off almost 50% this year. And speaking of stagflation, Brazil has been among the most aggressive in raising interest rates. And not only has the currency fallen, but they also have, they've been contracting. And so you have, I think, in Brazil, you have a real picture of what stagflation could look like. Contracting, a really small contracting of the economy, high inflation, high interest rates, falling currency. I still think that China's got some upside. I think that fair value for the Chinese currency is closer to 620. We're finishing the year firm against China. I mean that the Chinese RMB is firm. Their PMI was a bit better than expected. I think people are often, especially in the West, in a hurry to write China off. I think that they have different criteria, and just because some of their moves interfere with the market's integrity or punish rich people, I don't think that really is something that is a very salient point in Beijing circles. But I think the Chinese currency will have another good year.
Mark, last quick question here, and probably the most important question I'm going to throw at you. I really want you to make a hard prediction here for 2022. Chicago Cubs, they're going to finish above 500 for a change?
I hope so.
Yeah.
What a heartbreak, huh? What a heartbreak.
Yeah. All right, Mark, great to catch up with you. Have a wonderful new year, and we'll catch up with you on the other side there. Mark Chandler there, giving us his perspective here, some great perspective here on what we can maybe look for, particularly with some of the currencies. I mean, Paul, you talk about the dollar strength we saw this year. That took a lot of people by surprise.
It did, and you know, it's interesting. I just can't see, as I said earlier, a bear case for the dollar here. It just seems like when you look at the relative pace of the economy, where the Fed's going, it just seems like you have to be long the dollar here. And perhaps if you want to take some incremental risk, some of those emerging market currencies, as Marcus is talking about, perhaps there. But boy, it's tough to kind of make a bull case for the sterling or the euro vis-a-vis the dollar.
Yeah, and of course, this is where, of course, a lot of the monetary policy is going to come into play. We got a lot more to talk about here on the simulcast across Bloomberg TV and radio. We are going to talk a little bit more about the COVID virus, and more importantly, about the return to office. A lot of folks are supposed to come back to the office on Monday morning, but some banks are saying, well, we might give you a little bit of reprieve. The expectation that a lot of people are going to be out there partying, maybe they should stay home just a little bit longer. Romaine Bostic, Paul Sweeney, Bloomberg TV and radio. We'll be back in a moment.
Protesters breached the Capitol.
Democracy has prevailed.
A flash mob decided to take on the short.
Giant container ship blocking the Suez Canal.
10,000 new types of crypto coins. Crackdown on tech in China.
In the billionaire space
The
race.
Delta variant of the COVID virus.
Evergrande is the most heavily indebted developer.
Of the chip shortage.
Withdrawal of U.S. forces from Afghanistan.
We did not get everybody out.
Songs you love.
Rising energy prices.
In Europe, it's a huge crisis.
The Omicron variant has triggered a global rush.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
From Vancouver to Toronto, condominium towers are shifting the skyline in Canadian cities. Despite all the new build, there's one residential architectural style that remains a mainstay of Montreal. They're called plexes, named for the number of apartments inside. 2 for a duplex, 3 for a triplex. Starting in the 1800s, these colorful apartment buildings, with often ornate facades and treacherous outdoor staircases, have come to dominate many of the city's neighborhoods. As industrial Montreal began to become busier and more populated, people looked for new places to build. Inside the apartments, a central corridor runs front to back, with rooms opening to each side of the hallway. Like many homes of the period, the kitchens were in the back. An external, typically spiral staircase connects the back door to a small outdoor area bordering the alley. But beyond the standard shape, plexes are a little bit eclectic, reflecting different periods and cultures in Montreal. Some have enclosed staircases and plain facades. Others boast elaborate cornices, wood balconies, stained glass windows, and wrought iron staircases. The architecture of the plex is a little French-Canadian, a little Scottish, and a little British. The external staircase, however, seems to have been distinctly Quebecois, a feature French Canadians had started adding to the province's classic houses decades earlier. Working class plexes were sometimes known as the poor man's coffin for their overcrowding and lack of light. The humble status of Montreal's plexes means that they weren't always carefully preserved in the late 20th century. Many lost their original features, with solid oak doors and Art Deco stained glass landing in the trash. Today, plexes have regained popularity. Once known for affordability, Montreal has now joined Canada's real estate frenzy. Plexes are undergoing a modern renovation craze as people knock down original partition walls for more space and sunlight. Even today, the colorful, iconic buildings are still inspiring construction, blending into a small-town feel of many Montreal neighborhoods.
When you talk about the commercial viability, the idea that these companies can actually make money off of this here, does this become, I guess, something that's niche in the sense that you have to pay several $100,000s to do it, or does it come back down to a level where just regular folks like you and me will somehow find a way to be able to take a trip up, and this can be a business model that will be sustained?
I think it's important to note that space tourism is a small segment of the overall global space economy. Space tourism accounts for $1 billion of a global $350 billion global space economy.
What's the rest of it?
$260 billion of that is satellites, manufacturing them, launching them. And these satellites we use in our everyday lives, whether that's to listen to the radio, to watch Bloomberg on our satellite television, or to navigate us to our destination via GPS. And I hope in the near-term future, we will add getting our internet from space.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
All right, New Year's Eve. Welcome back to Bloomberg Markets. We are simulcasting radio and television. We're doing it this week, having a lot of fun with that, taking a look back at 2021, and then more importantly, taking a look ahead to 2022. Well, 2022 was supposed to be a time when a lot of corporate America gets back to the office. And in fact, the big investment banks were talking a big game for a long time about getting folks back to work, but they're taking a little bit more cautious stance here as we go into the new year as it relates to this Omicron issue here. It's really kind of impacting some plans. Maddie Mills joins us, Bloomberg Quick Take. Maddie, again, I think JP Morgan, I think Goldman Sachs, they were pretty successful bringing people back, but they're saying, let's be a little bit more cautious here in the new year. What do we know?
Yeah, and the latest, of course, Bank of America announcing it wants its employees to be working from home in these next first couple of weeks of the new year, especially following gatherings that tonight are likely going to lead to an even bigger surge. The U.S. seeing the 2 highest daily COVID positive case counts over the past 2 days that we've seen in the entire pandemic. So these banks are taking note of that, but they're still saying, look, we're going to expect you guys to come back in throughout 2022. This is just a temporary precaution for these first couple of weeks as we see these surges. I do want to update you guys, though, on the booster shot recommendations from these banks, because that's another area that we're going to continue to see measures changing on. We have Goldman amping up testing to twice weekly for all employees who do start to come in after these next couple weeks. They are also going to have a booster shot requirement. We have Jefferies Financial Group having a booster shot requirement by the end of January as well. So that's going to be something that potentially all companies are going to have to develop guidelines for moving into the new year.
Yeah, a lot of them trying to develop guidelines for, of course, vaccinations. We're also hearing from some of these companies that you might actually have to wear a mask indoors as well.
Yeah, and we heard from Goldman Sachs today also encouraging people, something that we probably all love, have less meetings if possible. And if you do need to have meetings, keep those masks on and keep the gatherings as small as possible. So this is really interesting, though, because when you look globally, the UK really pushed for people to get their employees at home, don't bring them into the office. Here in the US, we're seeing the CDC kind of saying the opposite, right? Keep employees in, let's lower isolation guidelines so that we can get people back in the office and keep our economy running. So the messaging has varied globally. And I think across the board, everyone wants to keep everybody safe. But here in the States, we definitely want to keep people working as well.
So, Maddie, is the expectation that Jamie Dimon is going to put out a memo in a week or two saying, okay, now you guys can come back in the office?
I honestly do think so. I think that we're seeing basically this push of the first 2 weeks of the new year being a kind of example of just let's stay calm for 14 days, get that isolation period over with so that we don't bring everyone back into the office full throttle in 2022 and potentially have a huge outbreak in any of these offices. But all of these banks have said, we're not changing our plans. Don't get excited about working from home full time. Nobody buy a new house across the country in these next 2 weeks. We're going to ask you all to come back.
All right, Madison Mills giving us that update here on the potential, I guess, return to office being delayed just a little bit longer here, at least for some of the big banks that cover. Of course, another big story this year has been the moves that we've seen in the cryptocurrency space, particularly with Bitcoin, Ether, and quite a few of the other coins out there as well. Akela Gardner joining us right now, Bloomberg News reporter who covers a lot of the crypto sphere for us here. And Akela, this was a pretty good year. I mean, despite all the sort of downturn that we've had over the last few weeks here, Bitcoin's still well above where it was at the start of the year.
Definitely, this was a great year for Bitcoin. It finished with a 65% gain overall, but December, it is in the red right now. It's about 15% down this December. That's the worst December since 2013. But we're definitely expecting crypto to continue to rally in 2022 as many retail investors and analysts hope for that price to reach new highs.
Kayla, you know, one of the interesting things about crypto is we haven't really seen a full-throated endorsement of crypto in general, Bitcoin in particular, Ethereum, from some of the big financial institutions. We still have a lot of skepticism there. Is the expectation that 2022 may be the year where there's maybe a more fuller embrace?
I think 2021 was a pretty big year for Bitcoin and for cryptocurrencies in general. It definitely pushed its way into the mainstream, becoming more popular, but it was still as volatile as ever, even with embrace from some companies and from some banks. But I think you're right, there is still some hesitancy. There is exposure at some of the major Wall Street institutions to their clients to crypto-related products, but still there hasn't been that yet full embrace.
Kayla, the other thing, though, that we sort of, I guess, kind of glossed over this year was all the talk about regulation. That regulation never quite came, but there's still some concern here about whether the CFTC cracks down a little bit more on this, or maybe whether they open up the door to some of these alternative vehicles with regards to ETFs and the like. Any progress that we're expecting on that next year?
I think you're 100% right, Romaine. I think we're definitely going to be watching for some concrete regulation from our regulators to see if that could really stable out this market. But this year we did see the approval of the first US-based ETF, a futures ETF, I should say. But investors are still holding out for a spot ETF on Bitcoin and other cryptocurrencies. But for sure, that we expected much more in terms of regulation this year, but we have yet to see anything concrete.
All right, Kayla Gardner, thank you so much. We appreciate that. Kayla Gardner, Bloomberg News, following all things crypto, and it was another big year for crypto. Certainly a lot of retail interest, a lot of interest, you know, ETFs, they're now using the futures. But the question is, when will we see, again, for some more adoption, some more support from some of the big financial institutions? We'll keep an eye on that story in 2022. Coming up, we're going to talk health and wellness, and why not? It's the beginning of the year, make some good resolutions, get things maybe a little bit more healthy perspective. And, you know, a lot of folks really did embrace the at-home workout during the pandemic. Let's see how this is going to evolve going forward. We're going to take a look at that coming up. So we have more coming up. This is Bloomberg.
The energy crisis, there's a lack of drivers. Is there anything that you need to ask authorities to do better, or that your clients want the UK to do better?
I think we're at a moment in time where we're coming out of the pandemic and there are a handful of things going on. I think all over the world there are labor issues that are really a reflection of this transition out of the pandemic. There are supply chain issues. Some of this stuff is transitory. There are some secular trends that we have to watch closely. But I think we're adjusting and dealing with it as anybody else is. And I think leaders here are thinking about it the same way leaders are around the world.
When you look at the UK and, of course, some of these green investments that the UK and the City of London particularly has been really trying to pitch, you've been extremely involved in carbon offsetting. Can London really spearhead that movement?
Well, I think it's important that governments around the world partner with the private sector to try to get capital directed toward innovation in a way that we can accelerate the climate transition. And I want to emphasize it's clearly a transition.
how all that chocolate makes it to the supermarkets in time for Christmas. I'm James Walcock, and I got really curious how chocolate makes its way to the supermarkets every Christmas. So I came here to Nestle's distribution centre to find out how it works. Almost 120 lorries come here every day, and they drop off coffee, chocolate, Kit Kats, toffee crisp, you name it. If it's made by Nestle, it will come through here, and it will get sorted by machines who will then load it onto a monorail that runs right up and down the facility. Automated cranes, like this one coming in behind me now, then load all of the chocolate, storage, all of Nestle's goods into this big warehouse. It can hold up to 100,000 crates. And then after it's been sorted and stored, sometimes for months, it will then end up over here, where then lorries will then take it out to supermarkets up and down the country. You can see the entire process is done without people. Goods can come and leave, sometimes without ever touching human hands. It's one of the largest automated centres in the UK, and it opened during COVID. So this Xmas is its first big test, and so far, it looks like things are going well.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Now, after you made your famous trade that we talked about, I think you put on a trade where you bought a lot of gold or gold futures, and you were what was called by some a gold bug. You're a big believer in gold. Gold's now about $1,700 an ounce or so. Are you believing that gold is now a good investment at this price?
Yeah, we do, and thank you for bringing that up. We do believe that gold does very well in times of inflation. So what happens is if you own long-term treasury bonds that are yielding 2% and interest rates move up to 5%, those bonds fall materially in value. Likewise, if you have cash sitting in a bank that you're earning 0% on, inflation's 4%, you're gradually eroding the value of your money. So as inflation picks up, people try and get out of fixed income, they try and get out of cash, and the logical place to go is gold, especially if it starts to rise in inflationary times. But because the amount of money trying to move out of cash and fixed income dwarfs the amount of investable gold, that the supply and demand imbalance causes gold to rise. And the more it rises, it sort of feeds on itself and has the potential to go what I call parabolic.
So today, you are a big believer in gold as a good investment now?
Yeah, so we thought in 2009 that with the Fed doing quantitative easing, which is essentially printing money, that would lead to inflation. But what happened was that while the Fed printed money, they at the same time raised the capital and reserve requirements in banks. So the money sort of recycled when the Fed bought treasuries, created money, wound up in the banks, and then was redeposited at the Fed. So the amount of excess reserves at the Fed almost rose by the same amount they were printed, and the money never really entered the money supply, so it was not inflationary. This time around, the money has entered the money supply. So the money supply was up something like 25% last year. And the best indicator of inflation is money supply. So I do think we have inflation coming well in excess of what the current expectations are.
This is Bloomberg Markets, a special edition here on this New Year's Eve, simulcast across Bloomberg TV and radio. Romaine Bostic here alongside Paul Sweeney. Looking ahead to 2022, Paul, I know you got a big New Year's resolution, right? Try to get in shape?
Try to get in shape. You know, I actually have been on the Peloton thing. That was a work from home thing, and I actually got into it, not as much as some other people I know, but But coming back to work now, it's kind of made it even harder. So
yeah, it's
always
hard.
looking for what works, I guess.
Yeah, everyone's looking for what works. Everyone's looking to try to stay motivated towards those fitness goals. Our next guest, he has a company that tries to help sort of connect people with people who can help motivate them and keep them on the right track. Rishi Mandel, he's the CEO of Future. It's an app that pairs users with fitness coaches remotely out there. Rishi, thanks for being here today. We've seen, at least during the pandemic, a whole proliferation of various fitness apps and fitness programs, whether it was Peloton like Paul uses or Beachbody or other things, and even Future. What Future does, though, is a little bit different. You're basically taking actual trainers and then pairing them up with the users of your app, and then what happens? These are customized programs these people are getting?
You got it. We pair you with a world-class coach, and no matter if you're in the office today, at home tomorrow, traveling the next day, what they do is get a sense of what your surroundings are going to entail, build you a custom program for that. We send every customer an Apple Watch so they can see, your coach can see if you're actually doing it or not. And there's a real accountability. That is so unique in consumer fitness. You know, the history of fitness is, like you said, we set our New Year's resolutions. The majority of us will pick something up, and then nothing sticks. 80% of Americans don't move enough. And the missing ingredient is when you pick up one single modality, it's really rigid, right? And all this change happens in your life, and it's hard to stick to one thing for the rest of your life. So what we've designed is the way to bring an expert into your life every single day. You're never on your own. That person does all the thinking, planning, tracking to keep you active, keep you fit. And we've seen incredible results. People move very often. They talk to their doctor maybe once or twice a year about their health.
Yeah.
They talk to their coach on Future over 1,500 times a year, right? And that interactivity is new. I think we're going to see a lot of that in health in 2022.
So Rishi, you and your partner, you co-founded, I guess you launched this product in the summer of 2019. So you're really a company, a business that's really been born and kind of developed within the context of a pandemic. How has a pandemic impacted your business, and how do you think consumers are going to, kind of deal with their health and wellness coming out on the other side of this pandemic?
Yeah, a few things have happened. There is more conversation about our health than ever before. We're talking about communicable diseases and comorbidities. People have a focus on preventative health, on performing and feeling great every single day. The other thing that's happened is years of acceleration of technology adoption, right? My co-founder was one of the creators of FaceTime and iMessage at Apple. And we've had the technology to connect people intimately from afar. But over the last 2 years, we've had billions of Zoom calls. We've had an acceleration of people's comfort of talking to people from afar. So with the increased social isolation, the amount of change that's happening to our routines, and this adoption of this technology, what we've seen is people are more comfortable connecting with an expert who they need help from digitally. And that, we think, is going to accelerate something amazing, which is bringing experts into your life when you need them.
Yeah.
Right? Think about text message therapy companies. When you're feeling anxious or depressed, instead of making an appointment with their local therapist for, next Tuesday, you could talk to someone within an hour, right? And we see that in fitness. We give you a coach who's there for you every single day at every beat.
Well, talk a little bit about here, I guess, the value proposition here. I mean, there are a lot of competitors out there either doing what you do or doing maybe something similar, and maybe not quite exactly what you do, but there are a lot of options out there for people here. And for folks who are maybe just trying to sort of weed through sort of what's going to work for them and what's not going to work for them, I mean, what's the value proposition that you offer over some of those competitors?
Yeah, I think, a lot of what's out there for people is content, right? There's no end to the amount of exercise, fitness, content, and plans that you can access. And there's no history of any of that sustaining over long periods of time. Then there's all the devices, and you get into one modality, and it's really hard to imagine you're going to do that one thing, boxing or cycling, for the rest of your life in perpetuity. Just like people want a well-balanced diet, they want a well-balanced fitness routine. They want to be outside when it's sunny. They want to be inside when it's cold. They want to, get a little bit of strength and move. And that means you have to try to stitch together a lot of different things. And over the course of your life, as you get promoted or you move or, pandemics happen, there's some dynamism to what will work for you today. So what we do is radically different than anything we've seen. We employ world-class coaches. We have more coaches on staff at Future than the NFL, NBA, NHL, MLB combined. So we have many, many amazing coaches on staff, and we pair them one-to-one with a customer. Every single Sunday, they design a new training plan for the week. That might be, Paul, I'm going to hold you accountable to getting on your Peloton a couple times a week, but we should also do some strength work. And hey, it's nice outside. Let's go for a hike. And then you have one person who is tracking against all of those modalities, keeping you accountable, adapting when circumstances change. It is a new idea, and people are really, I think, responding to having somebody in your life every single day, truly a human who checks in every single day and says, what can I do for you? It's brand new, and I think we're going to see an explosion of this.
Rishi, where do you find, how do you source these coaches? Because presumably that's one of the real value-added propositions of your app, of your service.
Yeah, 80% of our coaches come directly to us from a professional sports team, a Division I college program where they've trained Olympians. So These are high-level, amazing coaches. And it turns out there are 500,000 talented personal trainers and coaches in America. And so, historically, they've been really restricted to who's around me locally. Everyone wants to work out in the morning or after work, and there's not a lot of activity in the middle of the day. And by digitizing that relationship, they can reach 10 times as many people. And instead of seeing them once or twice a week, actually, truly, every single day, check in, get a sense of how your body's feeling. How'd you sleep last night? Have a bit of a conversation. It is so much more dynamic and personal. And like I said, I think in how you're eating, how you're sleeping, how you're moving, how you're dealing with stress, I think we're about to see this access to experts become something that is normalized. That is the trend I think is coming in 2022.
Rishi, you look like you're in good shape. Well, what do you do? Like, I'm serious. I mean, what do you guys do?
So I've got a startup. I've got 2 little kids, and
well,
obviously the pandemic.
That's your exercise right there.
And yet, I'm able to get small little workouts in. I do 3 or 4 strength lifts a week. I run outside once. If I can't do that, I'll hop on the bike. And you know what it is there's somebody who's checking in and keeping me accountable, and that just works wonders. It kind of pressures me into getting it done. I feel great when I get the text afterwards saying, I see what you did there. So that sustains me. And it's bite-sized chunks that I can fit in here and there.
All right, Rishi, thank you so much for joining us. Really, really interesting, cool app there. Rishi Mendel, Future CEO and co-founder. Kind of like customized workouts, Romain. And for a lot of people, that's probably what they need. They just need somebody there kind of coaxing them along, saying, get on the bike, get out for a hike. Sounds pretty cool.
Yeah, sometimes you just need somebody standing over your shoulder yelling at you.
Yeah.
Just like at work here.
Exactly. So, the best I can do is, hop on the Peloton, do a ride with Jen Sherman, my fave. And then, get out when it's warmer, you can go out and do stuff. But I think just walking around and dealing with New York City is plenty of workout on some days.
Yeah, definitely. So, look, everybody's got to find their way forward here. And, whether it's going to the gym physically or doing something at home or riding the Peloton or whatever it is, we all got to find ways to do it here. Paul, we got a lot more to talk about here. The big simulcast across TV and radio on Bloomberg. Romain Bostick here alongside Paul Sweeney. We're going to be counting you down to the closing bells a little bit later and to the end of the year.
worker perspective, a recent headline, you got Kellogg's Cereal Union says the latest agreement that they had was rejected. Deere had to finally make a union contract. How concerned are you about the longshoreman contract and union negotiations right now?
Well, we're some time away from that. The contract expires on the 30th of June next year, and both sides have told me that they'll sit down to the table and begin negotiating in May. These are always important discussions, and usually when the spotlight is on our industry. But there'll be some issues around wages. The industry is making a lot of money. The longshore folks would like to see that. Now, I don't speak for either side, but training and development of the workforce will also be key as robotics and automation are front and center. The workers cannot be left behind.
Yeah, but to that point, I mean, do you feel like the balance, though, has shifted? I mean, for so long, workers had a lot less negotiating power. Do you feel like the pendulum's shifting?
The International Longshore and Warehouse Union, which does work across 29 West Coast ports, is very strong and a democratic organization.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
So yeah, we trade the futures and we started to trade the physical. The question is how scalable it is over time. How liquid do these instruments stay? How long do they stay liquid for? One of the things you see is people tend to think that liquidity is a sort of monotonic upswing, so that they see something and if it gets a bit more liquid, they just assume it will keep getting, and it will never get less liquid again. And what we've seen in many contracts around the world in different things is they can go through a period where they're super liquid and then they go out of fashion and you don't see them again. So a couple of years ago, we made a lot of money trading egg futures in China because at one point they were trading, I believe, $5 billion a day. You know, eggs, like the thing you boil for your breakfast. You know, there was a lot of people speculating in that market. It made it a very good market for our models. But, you know, it didn't last that long before people stopped looking at it. It went back to being a hedging contract for farmers, and suddenly it's not a very interesting market. You know, I think one has to temper the excitement about cryptocurrencies and how much you can do in those markets until you could see where there's real liquidity.
How does an extra $1 trillion in spending not increase inflation?
by increasing the productive capacity of this country. And that's a very important thing that we, frankly, have not successfully done across most of my lifetime. You know, I've been waiting for this legislation for months since I became Transportation Secretary, but various presidents have been hoping to reach this day for decades, and it hasn't happened for all kinds of reasons. The American public has been rightly impatient. Now we're getting it done, both making up for lost time and laying a better foundation for the future. Let me also point out to the fact that Part 2 of the President's agenda, what I like to call the big deal, but Part 2 of that, the Build Back Better Act, has even more that will help beat back inflation by lowering some of the costs that Americans feel most acutely, the cost of childcare, the cost of health care, the cost of housing, the cost of prescription drugs, bringing those down while also making sure that we ease some of those labor market issues we have by making it easier for working parents to afford to go back to work.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
All right, good New Year's Eve afternoon from New York City. Romaine Bostick, Paul Sweeney with you. We have a special simulcast going today, as we've done all week, simulcast between Bloomberg Radio and television, kind of going through the market action this week and getting a good look ahead to the next year in 2022 and with the expectations there. And Romaine, you know, we've been seeing this video across the screens over the past couple of days, this extraordinary fire in Boulder, Colorado. I take special interest there. My son lives there. He just graduated from CU, but fortunately he's not there at the moment. But boy, just amazing. And good news for us is that we have Vinny Del Giudice. He based in Denver for Bloomberg News, and he joins us with a first-hand account of what's going on out there in Boulder. Vinny, thanks so much for joining us. What can you share with us from the ground?
Well, we know that this fire, the most of the damage is outside of the city of Boulder. It's in the communities of Louisville and Superior, roughly 30,000 people combined. And both those towns were evacuated. Everybody. Very dry up there. The state's been in a drought. And we're just learning in the past hour or two that up to 1,000 dwellings may have been destroyed. Wow. The count right now, the firm count is roughly 500 to 600, but miraculously, there have been no reports of fatalities, no reports of missing people. The sheriff calls that a miracle. Of course, the firefighters are still going through the rubble, still putting out fires. And sadly, of course, there are chances they might come upon something kind of grim. But right now, pretty miraculous evacuation. Very little time, happened in the blink of an eye, the governor says.
Yeah, and some of the pictures that we're seeing here, at least for our television audience, quite dramatic and quite sobering. Vinny, I am curious about what we know about the actual cause of the fire, meaning what actually sparked these fires to begin with.
Well, first of all, this is on the Front Range, it's called. It's the east side of the Rocky Mountains. It includes Denver all the way up to Boulder and beyond. The winds come down from the mountains in the winter, and they came down hard and fast, hurricane-force winds. Probably an accident, probably power lines down. You don't need 100 or more miles an hour to knock down a power line, do you? And that got it started. Again, tinder dry. And this area, people think of the mountains, this is actually high prairie east of the mountains. So you have prairie grass, you have construction, new construction, wood frame housing, and whoosh.
Wow.
There you go.
So, Vinny, what's the status now? Are the fires contained? Are they out? Are they still raging? Because I remember seeing just the scenes of raging fires.
The sheriff says, as far as they can tell, the sheriff of Boulder County says they're contained. The problem now is you have a lot of hot spots, and they have to go through there and fight those, or at least tamp them down. Let's say it's smoldering, maybe a little worse in some areas. Snow is moving in from the mountains. That should help matters. But when you get actually beyond some of this urban sprawl and into some of the old parts of Superior, and that's an old town, the old part now, smoking holes, the sheriff says. So you have the embers, you know, you have the winds. Think of the Great Chicago conflagration back in the 1870s. It was the same effect. The wind, the embers, the dryness.
Yeah. Yeah, and we've seen, of course, weeks of dryness, unseasonable dryness out there in some of those cities in Colorado. I am curious, Vinny, what the weather does look like going forward here. Are there any expectations that we could get some relief from Mother Nature?
Yes, Romaine. Snow is in the forecast, and as you see here in Denver, things are overcast. Some of that may be haze from the smoke. So this weekend, we're looking for snow. One forecast pegs it up to 10 inches in that area, but that'll certainly help. Of course, now you have the question of when the snow melts, the runoff, the fire damage, fire and flood. They don't mix that well, so there's going to be problems. But right now, the good news, the positive news, if you can say that, well, yes, you can say that, is no lives lost, no reports of missing persons. They had one, but they found that individual. And for that matter, no reports of serious injuries among the evacuees or the firefighters, police officers, paramedics, what have you.
Okay, well, that's certainly good to hear. And of course, we still very concerned about everyone out there and whatever loss of property they may have. Vinny, be safe. And of course, we wish everyone out there in Colorado to be safe as well. Vinny Giudice giving us an update there on those wildfires out in Colorado. All right, we're going to make a hard pivot from the scene in Colorado to Disney, Walt Disney. Of course, we talk a lot about the changing of the guard last year with Bob Chapek taking over for Bob Iger as CEO. But Bob Iger, he did stick around as chairman. Today, I think, is officially going to be his last day there as chairman, officially, I guess, ending the Bob Iger era. Here to talk a little bit more about that, I believe we have Lucas Shaw going to be joining us right now. Lucas, when you look at sort of, I guess, the legacy of Bob Iger and what he was able to do with Disney, sort of take it to that next level after Eisner left, what's the one thing, I think, that sort of encapsulates what he contributed to that company?
I mean, I think he was the most successful big media CEO of the century so far, really. You put him and then maybe Reed Hastings at Netflix. But with Bob Iger, he took a business that was struggling a little bit on the movie front and on the animation front, two areas of great history for the company. And he executed a series of transactions that positioned Disney as the dominant movie studio in the world with Pixar, with Marvel, and with Lucasfilm. And those are the same transactions that are now kind of leading to its greatest strength in streaming thus far, which is they have these properties and these characters that people love and can't seem to get enough of. I mean, they probably own, 5 or 6 of the 10 most popular characters in the world right now.
Yeah, Lucas, I guess, looking back on his career, which, as you mentioned, was an extraordinary career, he made some really big bets on buying these studios over the years. And in hindsight, we can look back and say, oh, it was a no-brainer. But these were big ticket items, and it was a strategy that not many people at the time were willing to do.
Yeah, I mean, I was talking with someone pretty high up at a rival company recently discussing some of the M&A that's happened in the past few years, and they say, whenever you buy a content or a studio or an IP owner, people always think you overpay. When Bob Iger goes out and buys Marvel, people think he paid too much. When Bob Iger goes and buys Pixar, they think he paid too much. When Bob Iger goes and buys Lucasfilm, they think he pays too much. And, it's too soon, certainly on the Lucasfilm one, to, do the math and see if it all evens out. But there's no question that he invested and kind of built his company around these franchises before anyone and at a level that no one else was willing to. And now all the other companies wish that they had done just one of those deals.
You're exactly right. And it's just an extraordinary career. And again, Bob Iger stepping down as chairman of the Walt Disney Company after a storied career. Lucas Shaw knows that story better than anybody. He's been covering the entertainment stuff for Bloomberg News out in L.A. We were glad to get a couple of minutes from him. So, again, it's one of those careers that's just, just extraordinary for the time of his career, the duration, and the success. So we had a lot of fun here this week. I did, doing the simulcast. Bloomberg Radio, Bloomberg Television last week. We will see you again in 2022. This is Paul Sweeney, and this is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. And the place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Protesters breached the Capitol.
Democracy has prevailed.
A flash mob decided to take on the short.
Giant container ship blocking the Suez Canal. 1,000 new types of crypto coins.
Crackdown on tech in China.
In the billionaire space race.
The Delta variant of the COVID virus.
Evergrande is the most heavily indebted developer.
Of the chip shortage.
Withdrawal of U.S. forces from Afghanistan.
We did not get everybody out.
Songs, you love.
Rising energy prices.
In Europe, it's a huge crisis.
The Omicron variant has triggered a global rush.
Protesters breached the Capitol.
Container ship blocking the Suez Canal. Types of crypto coins.
Crackdown on tech in China.
In the billionaire space
The
race.
Delta variant.
The chip shortage.
Afghanistan. Rising energy
It's a
prices.
huge crisis.
The Omicron variant has triggered.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising. This is Bloomberg Markets from New York to our audience worldwide, a global simulcast right now across Bloomberg TV, radio, and our YouTube platforms. Romain Bostic here alongside Tim Stenovic and Kriti Gupta here on this New Year's Eve. Happy New Year, guys.
Hey, Happy New Year to you, too.
Yeah, they're already celebrating somewhere, right? I think Pakistan right now just hit midnight, so congratulations to all our friends out there in Karachi.
Hey, if we were to go back to January, Romain,
yeah,
the S&P 500, the estimates from analysts, they were saying, okay, the most bullish case back in January, about 4,400 points.
Yeah.
Look where we are now.
Yeah.
Just shy of 4,800.
Yeah, 4,800 here on the S&P 500. You talk about the gains that we booked this year. I mean, look, 3 straight years of gains on the S&P 500, double-digit percentage gains. The NASDAQ, keep in mind, I think we're something like 6 straight years now here, too. So, Kriti, this has been a remarkable bull run, or a certain leg of whatever this bull run has been, despite some of the weakness that we're seeing, at least on this final day of the year.
Yeah, remarkable is, I think, really the key word there. And you just heard Tim talk about that $4,400 price target for the S&P 500 in 2021. Well, what's interesting is that's also the low end of the forecast for 2022 as well. Essentially, the message here is that the stock market can go anywhere. Just because we had those really monstrous gains in the last 3 years does not mean that they'll sustain. But hey, if you have tech on your side, why not have that pretty bullish case as well?
Yeah, and a big concern now, of course, is a lot of the catalysts that helped get us this 27% gain on the S&P 500 this year. Some of those catalysts might not necessarily be around in 2022. Let's get some perspective from our first guest here, helping us kick off the show, Jay Hatfield. He's Infrastructure Capital Portfolio Manager and Chief Investment Officer. Jay, let's start off with 2022 and what potentially could actually be an impediment for this market.
Thanks, Romain. Happy New Year to everyone. Well, as usual, the really critical judgment to make is what is Federal Reserve policy going to be. We're quite bullish about Fed policy. If you look, the Fed has caused, there's been 19 tightenings of policy since World War II. 11 of those resulted in a recession, 8 of them in a soft landing. But we do think that the Fed got religion over the last couple of years. They've abandoned their single target of 2%, which is completely unsubstantiated, by the way. They just made that up. And now they're more flexible. Plus, we're going to have more Biden appointees. So we think that they'll focus on their dual mandate. They'll stick to the dot plot, just raise rates 3 times, and not start quantitative tightening, which is a disaster for the market. That's what happened in 2018. is the Fed was shrinking the balance sheet. Right now, they're not slated to shrink the balance sheet, just stop the excess liquidity.
Jay, what is, you know, we've been talking to a lot of analysts throughout the week about 2022. Many of them agree the biggest risk is a misstep by the Fed. What do you think the biggest risk is?
Well, I think that, I mean, obviously that is the biggest risk, but what goes along with that is really just, does inflation accelerate beyond everybody's expectations? So a couple of months ago, our calculations were that inflation run rate was double digits, because keep in mind that BLS does not properly mark rents to market, and energy inflation was raging at the time. So if inflation prints hot, then I don't know if it's a policy mistake, but the Fed may have to prioritize inflation reduction over employment. So that's really the key risk, is accelerating inflation.